How does it feel to be a big winner, chat? How does it feel to be a big winner, chat? How does it feel? How does it feel, bro, to hold your shares in the face of haters? In the face of everyone telling you it's going to 15 or 17 or... Isn't it great to be able to trust your analysis and not listen to stupid people? Man. But today's not really about... I mean, it's about the stock. You know, the stock's crushing. We're pushing 23. But I want to read old GameStop earnings transcripts because it's one of the few things I've never done. And, you know, I'm bored. So, Moose, you missed yesterday, bro. Mooma was actually in here. He was asking about you. But doesn't it feel good, bro? Doesn't it feel good to be a big winner, bro? Doesn't it feel good to be a big winner? Oh, man. Look at... Dude, this thing is gripping right now. This thing is ripping, son. All right. We don't need to focus on the stock right now. Obviously, you know, we're big winners. We already knew that. We knew that at 20. We knew that at, we've known that for a while. I was away from my desk almost all day. Oh, okay, at least you saw him. He was wondering where you were at. I mean, I was wondering where you were at. And, what, 7 days till earnings? Right? Yeah, earnings is next Friday. Wait, they're at, what? Oh, okay. I was so confused. I'm like, okay, so Tuesday, December 9th is earnings. One sec. Still getting over being sick, so sorry. Sorry if there's random intermissions. Still currently dying. Mooma said he was just working a lot at Amazon, so I assume pretty good. Amazon's a decent job. Alright, so let's get this started. This is Q4 2022. This is the last earnings call GameStop had, as far as, you know, that I can see. I was sick all weekend as well, lots of colds. I'm glad I didn't get as sick as I usually do. Like, I was sick for like 2 days, and now I'm just like coughing a bunch of shit out. And my nose is super runny, but, yeah. I'm glad I didn't get super sick, because last time I got sick, I think I was streaming last time I got sick. Like, I was clapped for like a week. I like slept for like 2 or 3 days straight. So I didn't really get that sick this time around. But, yeah, still hella stuffy for sure. Alright, so this Q4 2022. Do I need to read the speaker? We don't need to read the speaker. We just need to read what Matt says, so. Now turn the call over to Matt Furlong. Good afternoon to everyone joining call today. I want to begin by thanking all our employees for their dedication and hard work over the past year. Similarly, I want to thank our customers, partners, and stockholders for their continued loyalty and enthusiasm. This continued passion was a strong tailwind for us in 2022 as we pivoted to focus on near-term profitability while pursuing longer-term sustainable growth. Before discussing our initiatives and results in detail, I want to take a moment to shed light on where we've been, where we are, and where we're looking to go. The past 2 years have obviously been transformative for GameStop. It's critical to provide context as to why we're a stronger and increasingly efficient business today, one that is well positioned in an otherwise challenged retail sector. I'm pretty sure they were losing a lot of money at this point, but I don't know. At the start of 2021, prior to any major changes to top GameStop, the company had burned some debt, a dwindling cash, strained relationship with vendors, and no meaningful stockholders in the boardroom. Company's future was very uncertain, and market participants predicted we were heading for bankruptcy, Throughout 2021, we refreshed our board, rebuilt our management, and recapitalized the balance sheet and paid down debt. We also established accredited partnerships, fortified our infrastructure, and explored growth opportunities, some of which materialized, some of which did not. As we began fiscal 2022, our operating environment dramatically changed due to the onset of inflation, as rising interest rates and material macro headwinds. In keeping with our ownership mentality, we consider the implication for GameStop and our stockholders. Rather than stand still, we pivoted last year to cut costs, optimize inventory, and focus on enhancing the customer experience. We found efficient ways to improve shipping times, integrate online and in-store shopping experiences, and establish a culture of increased incentivization among store leaders' tenured associates. I miss having an ad blocker. I miss having an ad blocker. There's so many ads. I don't know how people live their lives without ad blockers. Damn, Intel's at $42? That's crazy. This pivot obviously included headcount reductions as we streamlined operations and cultivated a fast-paced, intense operating environment geared toward cost containment, efficiency, and profitability. Fortunately, the team we have in place is embracing this culture and executing with effectiveness. The upshot of all this change is evidenced in our result this quarter. GameStop produced net income $48 million compared to a net loss of $147.5 million in Q4 2021. Looking ahead, we're aggressively focused on year-over-year profitability improvements while still pursuing pragmatic long-term growth. Wait, I thought they were losing money back then. Are they lying? What is that, 2022 Q4? I thought they lost money. I didn't think they had a profitable year until last year. Something's fishy here. Let's see. This, I believe. Okay. I could have sworn they lost money. Yeah, they lost 313 million. What are they? How are they saying? Maybe they're saying they only made. I bet if we go to the quarterly. Yeah, I bet they made money on the quarter, but not the year. I don't know how to see how much they made in the quarter. Let's see. I usually don't focus on that. I usually don't really care that much. Isn't that... Something's fishy there. Something's fishy there. It says they made money, but on the balance sheet, it says they didn't. I'm confused on that, unless I'm looking at the wrong thing. When was this? March 21st, 2023. I lost my spot. Yeah, that was that. I'm so confused. It doesn't even... Yeah, whatever. Let's see. I don't know where they got that they made 48 million. I guess you could do this. I guess I could look at the... That says 313. You can check this. What? This should say 313 as well, though. Oh, no, okay, I see. So you had 361, and then you would... Okay. I see it now. Okay. I'm just an idiot. It's fine. It's all good. Looking ahead, we're aggressively focused on Okay, we're taking a number of steps in fiscal year 2023 to improve our efficiency, can support these overarching goals. These include continuing to cut excess costs, including in Europe, where we have already initiated exits and partial wind downs in certain countries, leveraging our strengthened financial position to continue obtaining improved terms from suppliers and vendors, getting full console allocation to help us meet customer demand during this extended cycle, assessing partnerships with gaming and retail companies that can enable us to capture cost-effective top-line growth, leveraging our unique refurbishment capabilities to drive growth in pre-owned and building a strong presence in higher margin categories like collectibles and toys, where we have already seen pockets of growth. Although there's a lot of work and necessary execution in front of us, GameStop is a much healthier business today than it was at the start of 2021. Wow, that's a good earnings call. We have considerable cash on hand, negligible debt, streamlined inventory, and a path to full year of profitability. Wow, this was in 2022. They actually called that. That's crazy. Because if you go back to what would it be, 2023 Q4, I think that was their first profitable year, right? Oops. Where would it be? This one, I think. Yeah, I think it's this one. So I'm pretty sure they were profitable this year. Yep, 6 million. Look at that. That's crazy. They called it. They called it, bro. That's crazy. Back in 2022, they literally called it. We have considerable cash on hand, negligible debt, streamlined inventory, and a path to full year profitability. Wow, they called that, bro. That's insane. They called that. Damn. It just goes to show how important, like, keeping track of businesses is. Like, you would have been able to see this before anyone else if you just literally saw this sentence in the earnings call. One sentence. One fucking sentence. What you would have... That's wild, bro. That's actually wild. What was it trading at back then? I think it was still trading around like $20, but still. One sentence, bro. Just one sentence. That's all you needed. Crazy. A path to full year profitability. Where is it? Oh, you dropped back from 20 or 23. March 23. Yeah, you were still in the $20 range back when they posted that, so fuck, bro. If you were actually paying attention, that was such a good time. Man, that's crazy. That's crazy, bro. That's actually crazy. They literally gave you it in one sentence, bro. That's so wild. That's actually nuts. That trips me out. Anyway. So yeah, we have considerable cash on hand, negligible debt, streamlined inventory, and a path to full year profitability. Our plan is to use this strong positioning to continue delivering a unique customer experience and long-term stockholder value. Let me now turn to our financial results. Net sales were $2.2 billion for the quarter compared to $2.25 billion. That was $2.22 billion compared to $2.25 in Q4 2021. For the full year, net sales were $5.92 billion compared to $6 billion for fiscal year 2021. Net income was $48.2 million in the quarter, $0.16 per diluted share, compared to net loss of $140 or $7.5 million or $0.49 per diluted share in the prior year's fourth quarter. Company had a net loss of $313 million or $1.03 per diluted share for the full year, down from a net loss of $381 million or $1.31 per diluted share. SG&A was $453.4 million or 20% of sales, compared to $538 million or 23% of sales in last year's Q4. For the full year, SG&A was $1.68 billion, compared to $1.71 billion for fiscal year 2021. Turning to the balance sheet, God, I just can't believe they gave you that in one sentence, bro. Like, all you had to do is pay attention. All you had to do was pay attention to the business, and they literally told you what was coming before it even came. That shit is so wild. Who is this? Damn, bro. You're still coming to my stream to say stupid shit? Yeah. Yeah, I am talking about GameStop because I have what, $200,000 invested in it? How much are you shorting it? All right. All right. I forgot. You're made of bitch. You're made of a big old fucking bitch. You know, put your money where your mouth is, you brokey. All right. We finished the year with cash equivalents, and marketable securities, $1.39 billion. We finished fiscal year 2021 with cash equivalents, and marketable securities of $1.27 billion. We built back and invested our cash position over the course of the year, and we'll continue to focus on maintaining a very solid balance sheet. Continued term loan associated with the French government's response to COVID-19. Capital expenditures for the quarter were $11.6 million. Bringing full year CapEx to $55.9 million. We expect a reduction in CapEx in 2023 and to remain at limited levels. In the Q4, cash flow provided by operations was $337.2 million, compared to an outflow of $110.3 million during the same period last year. This reflects in part our focus on streamlining our inventory. We ended this year with $682.9 million in inventory compared to $915 million at the close of fiscal year 2021. Entering the new year, we expect to continue to incur transformation charges will be recorded in the Q1 of 2023 as we aggressively cut costs. And with respect to an outlook, we're not delivering guidance at this time. We want stockholders to judge us on our results instead of our words. In closing, there's still significant work ahead of us, and we're focused on building from this quarter's progress rather than reflecting on our gains. We're going to aggressively pursue further cost containment, efficiency, profitability, and pragmatic growth in the categories where we can consistently delight our customers. I'll wrap it up here today, as we always appreciate the enthusiasm and support from our customers. Dude, that's crazy. I just can't believe they gave you the fucking... I can't believe they gave it to you. One sentence, bro. That just honestly, that just goes to show how important analysis is. You could have missed everything. You could have missed everything. Literally, you didn't need any of this. All you needed was one sentence. One fucking sentence. Considerable cash on hand, negligible debt, streamlined inventory, and a path to full year. I mean, you don't even need the sentence. You just need these 6 words. A path to full year profitability. 6 years. There's your due diligence right there, bro. 6 words. Crazy, bro. That's actually nuts. Why isn't the price posted in the quarter anymore? Because my computer's shit. And my internet. Either my computer's shit or my internet shit. One of the two. I don't know which one it is. It lags every time I have, like, multiple things. Did you just ask a real question? That's crazy. That's crazy, bro. You just asked a real question? This is an evolution for Mudcats, bro. Did you just evolve? Did you just get like a moonstone? Like you're a Pokemon or something? That's crazy, bro. You evolved. I never thought that would be possible for someone like you. Wait. I can't read any more of these? Bro. What the hell? I can only read that one? No. No! Say it ain't so. Say it ain't so. I wanted to read all of them. Brother. Bro, they did paywall it. That's so messed up. I wonder if there's another website. I know there's Seeking Alpha, but that's paywalled too. That sucks. At least I think Seeking Alpha is paywalled. I can look at that one. But not that one. Dude, that's so annoying. Maybe I should have checked that before I started the stream. But whatever. Let's see. Let's hope another website has it. Apparently not that one. Oh, man. Well, that sucks. I don't think the GameStop website would have the transcript. No. They have the information, which, I mean, I guess you don't really need the transcript. Yo. Who is that? The name, or the picture looks familiar. Oh, P. What's up, P? Wait, have I seen that person? The picture looks familiar, but I don't know if I've seen that person here, actually. Maybe Motley Fool? Motley Fool has them. Or at least they have one. Well, this sucks. I wanted to read all those. Oh, wait. I just saw all earnings call transcripts. There we go. Right. They don't have... This is so stupid. Oh, man. What the heck, man? Motley Fool, give me what I want. Fuck. Company info. I can't find it. Ah, I found them. Found them. I don't know if they don't have all of them. They have up to 2019 though. It looks like. They don't have Q4 2022 though. Or wait, we already read that one, right? I'm pretty sure we already read that. That's the one we just read. I believe. I don't know what's going on. Is this not it? Yeah, this is it. Right? Yo, what's up, KCR? Kind of sucks that they don't have the screen names anymore. Cause I think that's KCR, right? Yeah. What's up, bro? Hope you're doing good. All right. So I'm pretty sure. Let's hope this isn't paywalled. Okay, sick. At least I found it. All right. So, you know, the operators say the same thing every time, so we don't need to read that. But so this is the prior quarter. I want to begin by acknowledging the dedication and focus of the teams managing our stores, fulfillment centers, and e-commerce platforms. As the holiday season begins, they're going the extra mile and working exceptionally hard to deliver for our customers. I also want to take the opportunity to acknowledge our stockholders who continue to demonstrate unrivaled enthusiasm and support. As we work to transform the company and do something unprecedented in the retail sector, that sustained passion is a major tailwind for us. Similar to last quarter, I'm going to spend some time at the outset of this call recapping where we've been, where we are now, and where we're looking to go. Throughout 2021 and 2022, we were extremely focused on repairing our decayed foundation, reestablishing a culture of operational intensity, setting the right long-term priority. This translated to building a strong balance sheet, modernizing a crumbling infrastructure, and putting together teams that are now able to operate with the nimbleness and efficiency our stockholders and customers expect. Today, we're in the process of aligning corporate costs to our go-forward needs after completing the majority of necessary upgrades to our systems, fulfillment capabilities, and overall foundation. A large portion of our cost cuts will stem from reductions in corporate headcount that have been made during the back half of this calendar year. In some cases, individuals who helped us complete key initiatives have left on their own accord and are not being replaced. In other cases, we made the decision to eliminate and streamline parts of the organization where we can leverage the work completed over the past 18 months to operate with increased efficiency. We now have a firm understanding of the resources required to pursue opportunities in gaming, as well as the high potential growth categories like collectibles and pre-owned businesses. Oh, wait. What? Looking ahead, we have two overarching pre-owned businesses. Collectibles and pre-owned businesses. What is that supposed to mean? What is that supposed to mean? Resources required to pursue opportunities in gaming, as well as high potential growth categories like collectors and pre-owned businesses. What is that supposed to mean? I don't... Looking ahead, we have two overarching priorities: achieving profitability in the near term and driving pragmatic growth over the long term. Now that the necessary investments have been made and we have identified an aforementioned opportunity set, we're going to be very judicious with respect to how we allocate capital to the core business. Dude, what? So, wait. So are they going to be buying businesses? That's like kind of what that seems like to me, because they've pursued collectibles. Pre-owned businesses, though. Are they talking about pre-owned items? That part throws me off. Maintaining a sizable cash position will maximize our optionality and keep us strong against the challenging economic backdrop. If a strategic asset or complementary... Oh my god, dude. So we are gonna fucking get businesses. This is from 2022, bro. This is from 2022. That's the crazy part. This isn't even new. This is old. If a strategic asset or complementary business becomes available in the right price range, we want to be able to explore those acquisitions. As a result of these steps in our planning, we believe GameStop is well positioned heading into 2023. We stand to benefit from our strong cash position, lack of debt, healthy inventory mix, shrinking cost structure, and disciplined focus on categories where we have competitive positioning. Related businesses, complementary businesses. So maybe they will buy Funko. Maybe they are going to buy Funko. Funko is a complementary business. Like, man, maybe they are going to buy it. See, this is what I was saying the other day, bro. The old due diligence is a million times better than anything anyone's posting today. Like, if you just go research any of the old stuff, bro, like, that's just 2 earnings calls. 2 earnings calls from 2 years ago, 2.5 years ago. There's so much valuable information in here. Maybe they are going to buy Funko. If a strategic asset or complementary business becomes available in the right price range, we want to be able to explore those acquisitions. As a result of these steps in our planning, we believe GameStop is well positioned heading into 2023. We stand to benefit from our strong cash position, lack of debt, healthy inventory mix, shrinking cost structure, and disciplined focus on categories where we have competitive positioning. We are also fortunate that the company's exposure to digital assets has been very modest, thanks to risk management efforts. They shouldn't even have exposure to digital assets, but whatever. Who knows? Maybe maybe I'm wrong about crypto. Maybe I'm wrong about crypto. I just don't like it. Gosh. We're also fortunate that the company has proactively minimized exposure to cryptocurrency risk throughout the year and does not currently hold a material balance of any token. Although we continue to believe there is long-term potential for digital assets in the gaming world, we have not and will not risk meaningful stockholder capital in the space. Let me now turn to our financial results for Q3. Interesting. That's an interesting sentence. Although we continue to believe there is long-term potential for digital assets in the gaming world, we have not and will not risk meaningful stockholder capital in the space. Let me now turn to our financial results. Dude, that's crazy. They're doing it now, though. They're putting that risk on now. But they also have so much money now. Back here, they probably would have only been able to buy like 100 million worth, if that. And yeah, that's interesting. Very interesting. Dude, old due diligence is the best, bro. Old due diligence is the best. Let's see. Okay. Net sales were 1.186 billion for the quarter compared to 1.297 billion prior third quarter. Approximately 50 million of the decline is attributable to FX. Sales attributable to new and expanded brand relationships remain strong. Likewise, sales in collectibles category remain strong on a year-to-date basis. SG&A with 387.9 million or 32.7% of sales compared to 421.5 million or 32.5% of sales in last third quarter. Notably, SG&A as a percentage of revenue was down on a sequential basis from 34.1% in Q2 of this year. We've also taken additional steps in recent weeks to further reduce SG&A on a go-forward basis now that significant improvements have been made to the core business. We reported a net loss of 94.7 million or 0.31 per diluted share compared to a net loss of 105.4 million or 0.35 in the prior year's third quarter. As with SG&A, we saw a healthy reduction in our net loss on a sequential basis versus Q2 of this year. Turning to the balance sheet, we ended the quarter with cash equivalents, and marketable securities of $1 billion. We continue to maintain strong cash position while sustaining strong in-stock levels for the busy holiday season. With respect to inventory, we have strengthened our position in recent months by divesting a small percentage of merchandise that was acquired late in 2021 and in early 2022. Divestitures occurred in categories seeing soft customer demand over multiple quarters. Inventory was 1.13 billion at the close of Q3, compared to 1.14 billion at the close of the prior year's third quarter. Wow. Dude, that's crazy, because they only have like 500 million of inventory now. I think it's like I think it's less than, I think it's like 550. They had $1 billion in inventory back then. And the inventory nowadays is super high quality for the most part. Bro, that's nuts. Yeah, they only have 484 million in inventory now. They had $1 billion back then. Where is it? this, I think. They had $1 billion. Wow. Dude, that's crazy. I mean, you know, they have cut a lot of stores and stuff, but still, that's crazy, the difference. Interesting. At the close of the reporting period, we had no borrowings under our ABL facility and no debt other than a low-interest unsecured term loan associated with the French government's response to COVID-19. Capital expenditures for the quarter were $13 million, up $0.5 million from last year's third quarter. We anticipate CapEx will remain at similar or reduced levels now that the company has largely completed its period of heavy investment. In the third quarter, cash flow provided by operations was $177.3 million, compared to an outflow of $293.7 million during the same period last year. In terms of an outlook, we are not providing formal guidance at this time. It is worth reiterating, however, that our goal to achieve profitability in the near term, I want to finish by reiterating what we've said in the past. We're attempting to accomplish something unprecedented in the retail sector. We're seeking to transform a legacy brick-and-mortar business that was on the brink of bankruptcy into a retailer that meets customers' needs through our stores, e-commerce properties, and emerging sales channels. This path carries risk and is taking time, but it is a path we're on. With that said, GameStop is a stronger business today than at any time in the recent past. I'll leave it there for this quarter. Dude, that's fucking crazy, dude. Holy shit. I'm so glad we're reading these. Maybe I'm the only nerd who likes this shit, but dude, just those 2 earnings calls give you everything. Just those 2 earnings calls, bro. How much due diligence have we done? And like, all you had to do was read 2 earnings calls. Fucking crazy, bro. Actually nuts. What's GameStop at? Holy shit, GameStop is ripping, son. It's a ripping, son. It's ripping. It's ripping. We'll look at an actual chart. 1 sec, dude. I am dying. I swear. Don't worry, chat. I'm back. There's a whopping 4 people here. God bless, dude. That just goes to show how view-botted my channel was. Straight up, bro. That just goes to show how view-botted my channel was. There's 4 people here on one of the most hype GameStop days we've had in who the fuck knows how long. That just goes to show, you know, my prediction was correct, bro. Like, they view bought my channel when the stock is about to go down. But when the stock is ripping, there's 4 people here. There's fucking 4 people here, dude. There should be a fuck ton of people here. You know, especially all the bullish GameStop investors. You know, there's so many bullish GameStop investors, bro. Like, what? There's 4 people here? 4 people? Oh, man. Oh, man, we're about to get rich, huh, chat? You know, I don't want to jinx it. I don't want to jinx it, because I tend to jinx it, but we're about to get rich, aren't we? We're about to get rich. I mean, we'll see. We'll see what happens, but I think we're about to get rich, chat. Holy shit. Holy shit. Well, if we get rich, I'll see you guys in Vegas. I'll be on the Ultimate X machine. I'll see you guys there. You'll have to fly into the US. Oh, man. You know, who knows? Maybe it rejects here. You are about to approach resistance. I hate this shit. I hate these stupid little fucking whatever this is, man. I'm just trying to analyze my stock. I don't think they have it on TradingView. Maybe I can use TradingView. I hate those stupid little things. I don't know what's going on there, but it's pretty annoying when I'm trying to analyze and there's these fucking $3 tails. God, that looks, I mean, this is a 1 minute chart, but doesn't that just look bullish as fuck? Let's see. Yeah, you're hitting resistance, old resistance back in July when you ranged for like 3 months. So, gonna be a lot of selling here. But if you could push that old resistance and start pushing to 24, sheesh, huh? That's a interesting price action. Interesting price action. Let's get back to the earnings calls, though. Let's get back. We'll see what we'll look at it here in a little bit. $4 warrants too. That's crazy because last time, you know, when you were trading at $22, $23 last time, the warrants were trading under $3, and now you're trading $4 warrants. That's fucking crazy. That's fucking nuts, bro. Damn, it feels good to be a gangster. Oh, chat, I'm going insane. I just love it so much. I just love being a big winner, bro. I just love being a big winner in the face of people who think I'm not a big winner. You know, I'll try not to flex too hard if it actually works out, but I can't promise anything. I might have to flex. 1 sec. Damn, it feels good to be a gangster. Alright. So what is this? This is Q2 2022. So thank you and good afternoon, everyone. I want to begin by reiterating the deep appreciation we have for our stockholders, unrivaled enthusiasm, passion, and support as we work to transform GameStop. These remain unique tailwinds for us, one we will always recognize and value. I also want to take this opportunity to thank everyone across the organization for bringing continued focus and intensity to our mission, particularly during an active Q2 that represented a transitional quarter for us. Oh, interesting. Very interesting. Before covering the quarter's specific initiatives and results, I want to provide a high-level update on where we've been and where we're looking to go as our transformation progresses. When our board began turning over early last year, GameStop was saddled with significant debt, decaying systems, limited employee depth, and a host of other issues. This is why we spent the second half of 2021 and the first half of 2022 making up for years of underinvestment in modernizing the business. The upshot is we now have a more diversified product catalog, strengthened fulfillment network, improved tech stack, an e-commerce presence, and fortified corporate infrastructure. Thanks to these improvements, including our SAP implementation, we are able to start focusing on a new set of priorities that include achieving profitability, launching proprietary products, leveraging our brand in new ways, and investing further in our stores. During Q2, we took steps to support each of these new priorities with respect to pursuing profitability in the coming quarters. We right-sized corporate expenditures and headcount following a period in which the company had hired more than 600 new individuals. These actions, combined with the elimination of one-time expenses in Q1, contributed to a 14.3% reduction in SG&A. What am I reading? It's just old earnings transcripts. This is Q2 2022. I'd recommend checking I would recommend checking them out if you've never done it. The Q3 and the Q4, those were crazy, bro. Those were crazy. Where was I? Oh yeah, here. So those first two were crazy. especially, you know, looking, you know, I'm reading 2.5-year-old earnings transcripts. When you read these and, you know, you're in the future already, you're like, holy shit. They literally called it. They literally called it, man. I mean, I wasn't paying attention to GameStop. I was a day trader back here. Like, I didn't even give a fuck about investing back here. And the market was bearish. We've done this while improving our e-commerce experience and reducing free shipping to customers to 1 to 3 days. We're going to retain a strong focus on cost containment and continue promoting an ownership mentality across the organization. On the product front, our enhanced tech capabilities allowed us to follow the launch of our digital wallet with the launch of our new marketplace that allows gamers, creators, collectors, and others to buy, sell, and trade NFTs. The launch of our NFT marketplace supports GameStop's pursuit of long-term growth in the cryptocurrency, NFT, and Web3 gaming verticals, all of which we expect to be increasingly relevant for the collectors and gamers of the future. See, that's interesting. I forgot about this. I forgot about that. When it comes to accredited partnerships, we've been actively exploring opportunities to strengthen GameStop's offerings and increase brand visibility. We're building on the momentum established by our previously disclosed partnerships with organizations like Immutable X and Loopring. So that's where those come from. Okay. Whether it be through new relationships that support our commerce business, blockchain group, or both, the deal we just announced with FTX is a byproduct of our commerce and blockchain teams working together to establish something unique in the retail world. Lastly, when it comes to investing in our stores, we rolled out an improved compensation model for the US. FTX. Crazy. For US store leaders, each of these store leaders is being given a time-based equity grant of $21,000 that vests over 3 years, as well as the opportunity to earn additional compensation every quarter via a performance-based equity grant. In conjunction, we're raising hourly pay for certain store associates. These steps were taken to help us enhance retention and recruitment of passion quality talent. When we think about the GameStop of the future, we expect our stores to help us maintain direct connectivity to customers and sustain localized order fulfillment capabilities across more geographies. This is why, even as we continue evolving our e-commerce and digital asset offerings, storage will remain a critical piece of the company's value proposition. Taken together, we believe the aforementioned steps can help us attain profitability in the coming quarters and produce additional revenue growth over the long term. Let me now turn to the financial results of Q2. GameStop must be going up still because people are piling in here now. Yep. Damn, it feels good to be a gangster. Ugh. Oh shit, chat. Oh shit, chat. Oh shit, chat. You gotta love it, bro. You gotta love being a big winner, chat. You gotta love being a big winner when everyone tells you you're not. It's just, it just hits different, bro. It just hits different when everyone's betting against you and you just win. You know, it just hits different. It just hits different. It's not that fun when nobody's betting against you, you know? But when everyone's betting against you, cheers. I don't have alcohol, but cheers. It does hit different. It feels like you're celebrating early. Maybe I could be. I don't think so, because the price on the screen is meaningless. I don't think I'm celebrating early. I was celebrating at $27 when the warrants got released, and then it went to $20. I'm not celebrating early. It's just, it is what it is. It's exciting. It's exciting to know that, it's gonna work. Net sales were $1.136 billion for the quarter, compared to $1.183 billion in the prior year's second quarter. Sales attributable to new and expanded brand relationships remain strong. It is also worth noting that sales attributable to collectibles, which is a segment we intend to grow over the long term, were $223.2 million for the quarter, compared to $177.2 million in the prior year's second quarter. SG&A was $387.5 million, or 34% of sales, compared to $378 million, or 32% in last second quarter. Sometimes what you say is so funny, but I understand. It's only a matter of time, my friend. It's only a matter of time where you wake up and it's fucking at $30, $40. Like, that's the reality of it. It's only, the reality is one day you're going to wake up and it's just going to be at $30, $40 and you're going to be like, oh shit. Like, that's the reality. When it's going up $1 or $2 a day, like, it's fun, it's exciting, but the reality is it's going to be sitting at $30, $40 at some point. So, I don't know. What's not to be excited about? You bounced off the lows, You are rejecting the old resistance, which is what it is. That's stock trading for you. It's a good spot to take profits if you're a trader, but but that's a beautiful thing to see. You want to see traders taking profits on the way up. You want to see that. The less people in the stock, the better. As noted, we had a strong reduction in SG&A on a sequential basis versus Q1 of this year, and we're taking further steps to reduce SG&A on a go-forward basis. We reported a net loss of $108.7 million, or 0.36%. Whatever, I'm not going to do that. Compared to a net loss of $61.6 million in the prior year's second quarter. There were no major one-time transformation transaction or related costs during the period. Turning to the balance sheet, we ended the quarter with cash equivalents of $908 million. We continue to maintain a sizable cash position, even while investing in inventory to sustain strong in-stock levels and mitigate the full impact of lingering supply chain issues. At the close of the second quarter, we had no borrowings under our ABL facility and no debt other than a low-interest unsecured term loan associated with French government's response to COVID-19. Total liabilities compared to the second quarter of last year were down $237.8 million. And you also have to realize every dollar the stock goes up or down is $10,000 for me. So, I might get a little excited for a dollar upswing, I'm just saying. Usually a dollar upswing isn't that exciting, but when you have over 10,000 shares, it's interesting. So, that might be part of it as well. This is definitely the most I've been invested in the stock for, the whole time. Straight up. So it is what it is, I'm sorry I got getting a little excited over a 40-cent move, but that's like $5,000, so I guess, it is what it is. Anyway, but I'm glad you're here too, bro. I'm glad there's real investors in the stock who, I hope this works out. I can't wait. I can't wait to see if it actually works out, because the few people that I know for sure are invested in this heavily. I just can't wait to see what the future brings for you guys. I just can't wait to see it. Capital expenditures for the quarter were $20.5 million, up $7 million from the last year's second quarter. Reflecting investments in our technology and enterprise systems, we anticipate CapEx will remain at a modest level. In the second quarter, cash flow from operations was an outflow of $103.4 million, compared to an outflow of $11.5 million during the same period last year. Inventory was $734.8 million at the close of the quarter, compared to $596.4 million at the close of the prior year's second quarter. In terms of an outlook, we're not providing formal guidance at this time. It is worth noting, however, that our ongoing engagement with key suppliers is positioning us to receive stronger supply of next-generation consoles in the months ahead. Dude, I'm kind of upset. I've never paid attention to the earnings calls of this. They gave you so much good information. If you've been tracking this stock for a long time, man, so much good info. I want to finish by reinforcing that we're working to accomplish something unprecedented in our industry, transform a legacy brick-and-mortar retailer into a technology-led organization that meets customers' needs through stores, e-commerce properties in both digital marketplaces and new online communities. Our path to becoming a more diversified and tech-centric business is one that obviously carries risk and will take time. This said, we believe GameStop is a much stronger business than it was 18 months ago. I'll leave it there for this quarter. We look forward to driving more progress in Q3. Bro, these are sick. I love these. Maybe I'm the only one, but I think this is fucking awesome. I wish I would have been reading these, 2 years ago, 3 years ago, but this is crazy. It's crazy reading these and being in the future, We're reading about where we're at now. From 3 years ago. Like, that's crazy. Sure, in this, 90% of my wealth, not counting house and car. Nice, bro. Well, hopefully it keeps holding 20. As I've said before, I don't really care if it goes up, as long as it holds 20. Like, that's realistically all that matters. If it holds 20, like, that's so awesome, bro. That is fucking awesome if it just holds 20. Like, it doesn't even need to go up. And, short-term price action, it's hard to predict, but it seems like it's going to hold 20. You drop below 20 for, like, what? I mean, it's hard to analyze because of the chart, but, like, or at least on TradingView. But how long did you drop below 20? Like, 10 minutes? 20 minutes? Like, it wasn't that long. It really wasn't that long. You drop below 20. I mean, it's a little... I think the data on TradingView is inaccurate. But you weren't even below 20 for, like, an hour. Like, that's bullish in a lot of ways. Short-term price action, though. All right, we appreciate all our stockholders. This is Q1 2022, so we appreciate all our stockholders' continued passion and support. The enthusiasm remains a differentiator and an extra motivator for all of us at GameStop. We don't take it for granted and never will. Before going over this past quarter's initiatives and results, I also want to once thank our team for continuing to bring strong focus and intensity to our mission. Change is continuing to be embraced across our stores, fulfillment centers, and offices. A constant emphasis on the customer is taking hold up and down the organization. This will remain key as we pursue sustained sales growth, establish broader offerings in consumer electronics, and launch new products aligned to the long-term future of gaming. During Q1, we specifically focused on 2 main areas: continuing to rebuild and strengthen our commerce business after years of underinvestment, and pursuing growth opportunities in the cryptocurrency, NFT, and Web3 gaming verticals, all of which we expect to be increasingly relevant for gamers of the future. With respect to our commerce business, we kept working to pragmatically expand product selection, improve delivery speeds, and strengthen the in-store and online shopping experience. We also made additional investments in our assortment, infrastructure, technology, and talent. Our sizable Q1 investment should help us round out our rebuild cycle. With regard to new offerings geared to the future of gaming, our blockchain team continued to drive progress when it comes to advancing new products, deepening partnerships, and establishing GameStop's presence in the digital asset communities. An output of these efforts was last month's launch of the GameStop Wallet, a digital asset wallet that allows gamers and others to store, send, receive, and use cryptocurrencies and NFTs across decentralized apps. The wallet, which has significant downloads and a 5-star rating in the Chrome store, will enable transactions on our new NFT marketplace when it launches in the second quarter. We firmly believe that digital assets are the core of future of gaming. Taken together, we believe these investments and initiatives prioritized over the past quarter are positioning us to become a more diversified and technology-centric business. Let me now turn to our financial results. For Q1, net sales increased 8% to just under $1.4 billion, compared to approximately $1.3 billion during the same period in 2021. As indicated in the past, long-term revenue growth is a primary metric by which we believe stockholders should assess our execution. SG&A was $452.2 million, or 32.8% of sales, compared to $370.3 million, or 29% of sales in last year's first quarter. We reported a net loss of $157.9 million, or 2.08 per diluted share, compared to a net loss of $66.8 million in the prior year's first quarter. There were no major one-time transformation, transactions, or related costs during the period. Turning to the balance sheet, we ended the quarter with cash and cash equivalents of $1.04 billion. That's interesting because the Q2 they only had 900 something million, so they either I'm pretty sure they lost money, but they also could have invested. Roughly $340 million higher than the end of the first quarter last year. We continue to maintain sizable cash position, even while investing in inventory to improve in-stock levels, meet heightened customer demand, and mitigate the full impact of global supply chain issues. At the end of the quarter, we had no borrowings under our ABL facility and no debt other than a low-interest unsecured term loan associated with French government's response to COVID-19. Total liabilities compared to the first quarter of last year were down $8.4 million. Capital expenditures for the quarter were $10.8 million, down $3.9 million from last year's first quarter. We anticipate CapEx will continue to remain at modest levels as we make pragmatic investments into our infrastructure and tech. In the first quarter, cash flow from operations was an outflow of $303.9 million, compared to an outflow of $18.8 million during the same period last year. This does not include the impact of an additional $76.9 million received in proceeds from digital asset sales, which is included in investing activities. This sucks. Being sick sucks, dude. In order to meet customer demand and drive sales growth amid the tight supply chain, we maintain inventory valued at $917.6 million as of the close of the quarter, compared to $570.9 million at the close of the prior year's first quarter. In terms of our outlook, we're not providing formal guidance at this time. I want to conclude by touching on the past year and our path forward in 2022. We set out 12 months ago to accomplish something unprecedented in our industry, transform a decaying brick-and-mortar retailer into a technology-led organization that meets customers' needs through stores, through e-commerce properties, and through emerging digital marketplaces and online communities. Our growth and the launch of new tech products, such as our digital asset wallet and upcoming NFT marketplace, demonstrate that we are, in fact, starting to transform. In the quarters and years ahead, we're going to continue embracing change, putting the customer first, and focusing on long-term stockholder value. I'll leave it there for this quarter. As always, our board and management appreciate the enthusiasm and support from those who matter most: customers, employees, and of course, GameStop stockholders. See, that's interesting. Because the more I read about it seems like what am I trying to say here? It seems like the NFT marketplace and their focus on digital assets was the reason the turnaround didn't happen as fast. Like, if they wouldn't have put money and investment towards digital assets back then, you might have got a quicker turnaround. You know, where we're at right now might have happened like a year or two sooner. That's kind of interesting to think about. You know, I don't know for sure, but I feel like that was kind of a mistake. And, you know, obviously, you know, hindsight, looking back, that was the worst time to be investing in crypto or digital assets, because, you know, 2022 to 23 was bear market. And FTX crashed, but obviously you wouldn't be able to predict that. Everyone and their mom thought Sam Bankman-Fried was that guy. For some reason. Personally, I've always been a crypto hater. You know, I've made money on crypto, don't get me wrong. I think you can trade it and stuff, but I've never been interested in it as an investment. And first time I got introduced to Bitcoin, I didn't know anything about investing, so I never bought it. And, you know, maybe, I don't know, just goes to show sometimes being a pessimist, you know, this one's for you, GameStop haters. Sometimes being a pessimist isn't a good idea. Sometimes you miss out on something revolutionary because you think you're smarter than everyone else. I'm just saying, you know, I'm speaking through experience. Sometimes when you think you're better than everyone else, you miss out on the true opportunities. Let's see. All right. I want to begin thanking all our team members for their dedication and hard work over the past year. It was an important period of foundation building, significant investment, and cultural change at GameStop. While we're still early stages of our transformation, we believe the steps taken over the last several months will be key value drivers for quarters and years down the road. The first year of our transformation was about starting to turn GameStop into a customer-obsessed technology company, one that has a wider offerings, more competitive pricing, faster shipping, stronger customer service, and an easier shopping experience. With that said, here's a brief recap of what changed in fiscal year 2021. We installed a new management team comprised of technology veterans and introduced a more equity-focused executive compensation structure to increase alignment with stockholders. We refreshed the board with stockholders and individuals who possess records of value creation. While reducing individual director compensation, we ended relationships with high-priced external consultants who were costing the company millions of dollars per year. We hired hundreds of new individuals with e-commerce operations and technology experience, while eliminating many redundant and unnecessary roles. We recapitalized the company's balance sheet after raising approximately $1.67 billion in capital. We expanded our product catalog to seize more market share in areas such as PC gaming, personal electronics, and virtual reality. We invest in our fulfillment network by standing up new facilities on the East Coast in York, Pennsylvania, and on the West Coast in Reno, Nevada. We invested in our systems and tech stack after years of decay and neglect. We invested in US-based customer service and established new facility in South Florida. We invested in a dedicated blockchain team and new capabilities to drive the development of initiatives such as our NFT marketplace, which we expect to launch by the end of the second quarter. We see significant long-term potential in more than $40 billion market for NFTs. In keeping with our focus on the customer, we're going to continue taking steps to create new offerings and make targeted bets in blockchain gaming and crypto. We recognize that our special connectivity with gamers provide us a unique opportunity in the Web 3.0 and digital asset world. See, they might have invested too much into crypto at a very bad time. That's why I was saying, like, potentially, you know, that's why the turnaround didn't happen as quickly. Like MSTR, that did stellar for long and is now down 50% from the highs. I mean, if you're bullish on crypto, that's a good investment, though, because the only reason it's down that much is because they have such high leverage in the 100,000 range of Bitcoin. So, like, if you're actually bullish on Bitcoin, MSTR could potentially be a good bet at this point. Kind of a more leveraged bet on Bitcoin. But, you know, I've said it before in the past, if 5-10 years from now Bitcoin's still sitting at like 100 grand, all those companies are fucked. Honestly, they're all screwed. Like, how are they gonna survive? But yeah, I would never invest in MSTR. You know, if I was gonna buy crypto at all, I would just buy Bitcoin. But you know, all in GameStop, baby, all in GameStop. We've learned from mistakes of the past decade when GameStop failed to adapt to the future of gaming. It is important to stress that GameStop has become such a cyclical business and so capital-starved that we have had to rebuild it from within. We've also had to change the way we assess revenue opportunities by starting to embrace, rather than run from, the new frontiers of gaming. Although there is a lot more hard work and necessary execution in front of us, GameStop is a completely different company today than it was at the beginning of the year. Shifting to the fourth quarter, I want to briefly touch on a few areas. We continue to establish new and expanded brand relationships, including with PC gaming companies such as Alienware, Corsair, and Lenovo. This helped grow our PC gaming sales by 150% for the full year. Holy shit, dude. I mean, at this point, GameStop was extremely overvalued from a fundamental perspective. So, though that is extremely impressive, if you go look at where the stock was trading during this earnings call, it still wasn't a good investment. It wasn't. We also formed a partnership with Razer to support sustained growth in PC gaming and console accessories such as controllers and headsets. We now have more than 100 Razer SKUs, including the company's latest laptop. We grew Power Up Reward Pro members by 31.8% on a year-over-year basis, taking total membership to approximately 5.8 million. Holy shit. I wonder how many members they have now. 5.8 million 4 years ago? Bro. I wonder how many Power Up or Pro members they have now. Like, that's nuts. Isn't Pro like 10 bucks a month? Or how much is Pro? I forget. That's crazy. That's a fuck ton. Where is it? Where's Pro? I forget how to find it on the website. I guess we can just do the credit card. Nope. Oh, it's right here. Duh, I'm an idiot. 25 bucks a year. So, I mean, I don't know how many Pro members they have now, but just off of that, in 2021, they were making 145 million just from Pro members. Holy shit. Like, that's impressive. And imagine if they have closer to, like, let's say they have, I don't know, let's say there's 7 million now, you know, just as an estimate. I mean, so they're making about 200 million just off Pro members. Like, that's fucking crazy, dude. Although, you know, Pro members get a lot of value, that's just driving traffic to the store. You know, if you're using your $5 welcome reward, you're probably buying something. And yeah, sure, you're getting $5 off of it, but you're still paying in some cases. Dude, that's crazy, bro. That's crazy. That's so crazy, bro. Just reading. Why haven't we read these before? Like, this is nuts. Reading this is nuts. Why have we never read these? This is fucking crazy reading this shit. We launched a redesigned app, which includes an enhanced user interface, improved scalability for a larger product catalog, and more functionality to support exclusive offers and promotions. We entered into a partnership with Immutable X that is intended to support the development of our NFT marketplace and provide up to 150 million IMX tokens upon achievement of certain milestones. Yeah. See, like, that's another funny thing is you can see the mistake. The mistake is right there. Like, look, the past three earnings calls we've read, they've talked a lot about NFTs and shit, and that was a mistake. If they wouldn't have been focused on that, they would have turned around quicker, I think. Potentially, you know. But if they still have that infrastructure in place, you know, if they still have the NFT marketplace or the other thing, the Web3 thing, if they still have that infrastructure, that could be valuable in today. You know, back here, it seems like it was a mistake, but, you know, maybe they could use it for something today. I don't know. Maybe not NFTs. I don't know if NFTs will ever come back. I think NFTs are pretty stupid, but maybe. You never know, bro. Markets are weird, bro. Some people, like, hype is weird. Hype is a weird thing. We have commenced discussions with an array of Layer 1s and Layer 2s about prospective partnerships that include development benefits and financial incentives. If and when more deals come to fruition, we'll announce them. Let me now turn to financial results. Net sales were $2.25 billion for the quarter, compared to $2.12 billion for the fourth quarter of 2020, and $2.19 billion in the fourth quarter of 2019. See, at this point, there was no cost cutting or anything, so it's pretty pretty consistent across the board. This is the first quarter in which our growth topped pre-pandemic levels. For the full year, net sales were $6 billion, compared to $5 billion for fiscal year 2020. Oh, interesting. As indicated in the past, long-term sales growth is the primary metric by which we believe stockholders should assess our execution. Long-term sales growth is the primary metric we believe stockholders should assess our execution. I don't agree with that. I would never agree with that. For me, it's all about profitability. Like, obviously, you want to see sales growing, of course, you know, bigger number is always better. But for me, profitability is all that matters. Straight up. I don't give a fuck. Like, if you made $1 billion one year, or if you made $1 billion in sales one year, and then the next year you only made 900 million in sales, but you made a few million more profit, I'd prefer that. For me, profit is all that matters. But I don't know. Of course, you know, you want to see growth in sales too, because growth in sales could mean more profit. But as you've seen with GameStop the past few years, that's not always the case. SG&A was $538.9 million for the quarter, compared to $419 million of sales in last year's fourth quarter. We reported a net loss of $147.5 million, compared to net income of $80.3 million in the prior year's fourth quarter. Interesting. For the full year, SG&A was that's interesting. Very interesting. And that makes me seem like they were putting too much investment into crypto and NFTs. I don't know, but that's just what that seems like to me. For the full year, SG&A was $1.71 billion, compared to $1.51 billion last fiscal year. We had a net loss of $381 million for fiscal year 2021, relative to $215 million for fiscal year 2020. Turning to the balance sheet, we finished the year with cash equivalents of $1.27 billion. roughly $760 million higher than the company's cash position at the close of last year. We're maintaining a sizable cash position, even while continuing to invest heavily in inventory to drive pragmatic growth and meet demand amid global supply chain issues. We intend to supply our cash position by the end of fiscal year 2022, assuming the operating environment permits. At the end of the year, we had no borrowings under our ABL facility and no debt other than $44.6 million low interest unsecured term loan. Yeah, we know about that. They had that for a while. Capital expenditures for the quarter were $21.3 million, bringing full year CapEx to $62 million. CapEx may remain elevated as we make pragmatic investments in our infrastructure and tech. In the fourth quarter, cash flow from operations was an outflow of $110.3 million, compared to an inflow of $164.8 million during the same period last year. In order to meet customer demand throughout the holiday season, we maintained a higher inventory level. We believe our inventory level remains prudent given our operating headwinds and increased customer demand. We ended the year with $915 million in inventory, compared to $602 million at the close of fiscal year 2020. To put things into context, the combination of supply chain issues and Omicron variant had a sizable impact on past year's holiday season. We made the conscious decision to lean in and absorb higher cost in order to meet customer demand. See that and Ryan Cohen talks about that in the interview, that they bought too much inventory and it decreased shareholder value because they couldn't sell it and they had to sell it at a discount. He actually talked about that, so it's probably a mix of the crypto investment and that. But they could still have the infrastructure for the crypto investment, you know. It's possible. It's definitely possible. We felt and continue to feel that investing in our customer and rebuilding brand loyalty right now is the company's best interest over the long term. With respect to an outlook, we're not delivering guidance at this time. We do not feel it's prudent to provide guidance during the early stages of our transformation, but with the current global backdrop, what we are comfortable saying is that we anticipate growth across our stores, e-commerce properties, and blockchain gaming offers. In closing, we know that investments and sacrifices made in fiscal year 2021 will take time to yield tangible value. We are completely comfortable with that. If GameStop is going to once again become a market leader in gaming and also realize new revenue opportunities across emerging communities, we needed to lay down a lasting foundation rather than taking shortcuts. That is what we did over the past year as we started to transform into a technology company. I'll wrap it up there. Interesting stuff. There's quite a few of these, man. There's a lot of these. Alright, I'm skipping that part. It says the same thing every time. I'm assuming GameStop's going down now because there was a lot of people here and now they left. Oh, it's still the same price. I guess people just don't appreciate good due diligence, even though this shit's all old. Did any of you guys know how many Power Up Reward members they had in 2021? I doubt it. I didn't know. And I've read a lot about this company. I didn't know they had 5.8 million Power Up Reward members. Like, that's fucking crazy. And it makes me wonder how many they have now, especially with the Pokemon thing. Like, how many... Bro, they could have over 10 million Power Up Reward members. Or It's not Power Up Rewards anymore. GameStop Pro. They could have over 10 million GameStop Pro members at this point. And, you know, be making $200 million plus just off GameStop Pro members. Like, that's crazy. They could have more than 10 million. With the Pokemon shit, they could have like 15, 20 million. Then you're, you know, pushing 400 million off Pro members. Like, that's crazy. Maintaining emphasis on the customer will remain key as we work to grow across categories and new areas. During the quarter, we focused on expanding our selection, accelerating delivery speeds, and improving the customer experience. We also made long-term investment in our infrastructure, talent, and technology. We believe our emphasis on the long term is positioning us to build what we ultimately become a much larger business relative to where we are in 2021. Interesting. That's interesting. We've also been, that's crazy. 2021, they were trying to become a larger business. And then, a couple years later, they're cutting everything. Like, that's crazy. We've also been exploring emerging opportunities in blockchain, NFTs, and Web 3.0 gaming. With this context in mind, here are a few recent initiatives of note. We continued growing our catalog by adding new products across consumer electronics, PC gaming, and other categories with significant addressable markets. Some of the brands we've established new and expanded relationships with include Samsung, LG, Razer, Vizio, Logitech, and Asus, just to name a few. Sales attributable to these new and expanded brand relationships helped to drive growth in the quarter. We also began implementing new assortment strategies within our stores, including an expansion of PC gaming merchandise across approximately 60% of US locations. With respect to hiring, we kept adding talent across the organization, including specialists with experience in e-commerce, UI, UX, blockchain operations, and supply chain. Over the course of 2021, we have made... Gosh, one sec. Hopefully I don't lose my voice, bro. Hopefully I don't lose my voice. Over the course of 2021, we've made more than 200 senior hires from some of the top technology companies. We also recently added a new office in Seattle and have identified an office location in Boston, positioning us within 2 tech hubs and a strong local talent market. Having footprints in these cities will help us attract and retain tech-focused teams with expertise in e-commerce and other areas. Shifting gears to our fulfillment network, we started shipping orders from Reno, Nevada, while increasing shipments from York, Pennsylvania. Interesting. Our expanded network is continuing to help us improve shipping times to customers across the U.S. Additionally, we recently announced a plan to hire up to 500 associates at our new customer care facility in South Florida. The facility, which is now operational, will be a key part of our new U.S.-based customer care operation. Lastly, we further strengthened our financial position by securing a new $500 million ABL facility, which closed early in November and includes improved liquidity and terms. The facility provides reduced borrowing costs, lighter covenants, and more flexibility. Let me now turn to our financial results for quarter. Net sales increased 29.1% to under 1.3 billion. All right, Moose. If I don't see you, have a good rest of your day, bro. God bless. Compared to just over $1 billion during the same period in 2020, as indicated in the past, long-term revenue growth is the primary metric by which we believe stockholders should assess our execution. SG&A was $421 million compared to $360 million of sales in last year's third quarter. Reported a net loss of $105 million compared to a net loss of $18 million in the prior year's third quarter. There were no one-time transformation transactions or related costs. Turning to the balance sheet, we ended the quarter with cash and cash equivalents of over $1.4 billion, nearly $1 billion higher than the end of the third quarter last year. We continue to maintain a sizable cash position, even while front-loading investments in inventory to meet heightened demand and mitigate the full impact of global supply chain issues. At the end of the quarter, we had no borrowings under our ABL facility and no debt other than $46.2 million, blah, 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 blah. Total liabilities compared to the third quarter of last year were down $262 million. Capital expenditures for the quarter were $12.5 million, bringing year-to-date CapEx to $40.7 million. We anticipate CapEx will continue to increase as we make pragmatic investments in our infrastructure and tech. In the third quarter, cash flow from operations was an outflow of $293 million, compared to an outflow of $184 million during the same period last year. In order to meet customer demand and drive sales growth amid tight supply chains, we grew our inventory to $1.14 billion as the close of the quarter, compared to $861 million at the close of the prior year's third quarter. In terms of our outlook, we're not providing formal guidance at this time. Before wrapping up, I do want to quickly reinforce some key points about our go-forward operation philosophy. Our emphasis on the top line stems from our leadership team's significant e-commerce experience and belief that revenue growth is critical. We believe revenue growth will translate to scale and market leadership, and from there, scale and market leadership will translate to greater free cash flows over time. Dude, that's so interesting that they thought that building revenue was the thing they needed to do, when in reality, focusing on profitability is all that matters. Our focus on the long term means we will continuously prioritize growth and market leadership over the short term margins. I'll leave it there for this quarter. As always, we appreciate all the enthusiasm and support from our customers, employees, and stockholders who believe we are the best in the world. Amen. Amen. Interesting thing is, though, is from here on out, you should see revenue growth. Like, maybe it won't be up every single quarter, but it's possible. It's possible that revenue will be up every single quarter from this point going forward. We'll see. We'll see. It's not a for sure thing, but it's a possibility. All right, so this is Q2 2021. Man, being sick sucks. I'll tell you. Chat, being sick sucks. Still sitting on the resistance. No, I mean, it's to be expected, but you want to keep pushing up into 24. All right, let's see. All right. We appreciate how everyone is stepping up and embracing GameStop's new operating principles. Since you last heard from us in June, our refreshed board of directors and new management teams have settled in. Oh, interesting. So we're getting about where Ryan Cohen joined the board, I believe. We're getting about there. We now have unified leadership, fully focused on 2 long-term goals, delighting customers and delivering value for stockholders. In addition to focusing on long-term opportunities, we took a number of steps over the past quarter to fortify the company's infrastructure and technology. We are focused on positioning GameStop to scale while obsessing over competitive pricing, expansive selection, and fast shipping. Our actions included continuing to add technology talent across the organization, including individuals with experience in e-commerce, UI, UX, operations, and supply chain. We also continued to expand our fulfillment network by adding a 530,000 square foot facility in Reno. This new facility, which is expected to be operational next year, will position us to further expand selection and expedite shipping. Do they still have that? I swear they got rid of that. Didn't they? I can't remember. We gotta go to the 10K. I thought they closed all their facilities except the Texas one. Where is that? Yeah, they don't even have it anymore. Interesting. Very interesting. They don't have the York, Pennsylvania one either, I don't think. I don't think that one was there either. I think it's just Texas. No. Yeah, it's just Texas. Huh. Dude, that's crazy, bro. It's crazy. It's crazy because, you know, prior to like 2 years ago, they were so focused on expansion, and obviously that didn't work. With addition, the company's fulfillment network will span both coasts of the continental U.S. For the first time, our new 700,000 square foot facility in York, Pennsylvania also began shipping orders during the quarter. We grew our catalog by adding new products and leading brands across consumer electronics, collectibles, toys, and more. We signed a new lease on a new customer care facility in South Florida and started adding talent to that team as we continue to build our customer care operation in the U.S. Lastly, we further strengthened our balance sheet and capital position by raising more than $1.1 billion in net proceeds from the June At the Money program. Let me now turn to the financial results for the quarter. Net sales increased 25.6%, $1.183 billion, compared to $942 million during the same period in 2020. That's pretty interesting. I forgot they didn't At the Money back then. Makes sense. We achieved this growth while overcoming a roughly 9% reduction in our global store fleet due to de-densification efforts and ongoing store closures across certain international markets due to the pandemic. We believe net sales is the primary metric by which stockholders should assess the company's execution. SG&A was $378.9 million, compared to $348.2 million in the last year's second quarter. Adjusting for severance and certain other costs, our adjusting SG&A was $372 million, compared to $336 million. The 430 basis point of leverage was primarily driven by store reopening after widespread shutdowns due to the pandemic in Q2 2020. We reported a net loss of $61.6 million, compared to a net loss of $111 million in the prior second quarter. Our adjusted net loss was $55 million, compared to adjusted net loss of $92 million. Our global store count was 4,642. Turning to the balance sheet, we ended the quarter with cash and restricted cash of $1.7 billion, which is just over $1 billion higher than the end of the second quarter last year. As we announced in June, we raised approximately $1.1 billion in net proceeds through the issuance of 5 million shares under an ATM. We intend to continue using those proceeds for general corporate purposes, as well as for investing in growth initiatives and maintaining a strong balance sheet. As a result of the ATM, total shares outstanding are now approximately 75 million. That's crazy when you're looking at today. At the end of the quarter, we had no borrowings under our asset-based revolving credit facility and no long-term debt other than a $47.5 million low-interest unsecured term loan. Debt levels compared to the second quarter of last year were down $424.7 million. CapEx for the quarter was $13.5 million, bringing year-to-date CapEx investment to $28.2 million, a number we anticipate will increase as the company continues investing in growth initiatives. In the second quarter, cash flow from operations was an outflow of $11.5 million, compared to an inflow of $192.8 million during the same period last year, largely due to the investment in inventory we're making to drive sales growth. And no guidance. Very interesting. Well, was that Q2? Yeah, that was Q2. New guy. A new guy. So now we're not on Matt Furlong anymore. We're at Eric Cerny. Do we keep reading? GameStop might hit another high a day. We'll see. We'll see. I do need to raise a little cash, but I'll wait for a second. I do have a sale at 23, just a 50 share sale at 23.69, but is it going to hit that? We'll see. You're like right there at that old resistance. It would be nice to see it push through it, though. You know, I'm not really, I'll be honest, I went all in at 21. Like, so, and being all in isn't the best thing in the world. You know, having cash is a beautiful thing, I'll say. It's a beautiful thing. Good for me, maybe. Yeah, we'll see. It wasn't good for a while there. Literally the day I went all in, it dropped to 19. So for a little bit there, it wasn't that good, but kind of interesting, though. I don't know. Let's pull it up. Maybe I'll sell 50 shares real quick. Happens like that, doesn't it? I mean, it's hard to time the market, bro. Unless you're really good at day trading and you're patient, and there, you know, there's a lot of factors that come into timing the market. But if you're just trying to invest and, you know, capture the gains of the next decades, timing the market is irrelevant. Straight up. Like, if you're day trading, you know, timing the market's pretty important, but, you know, if you're investing, timing the market is meaningless. Straight up. God, that's crazy. Doesn't that just look good, though? It looks good. It looks good. But obviously, you know, you're getting a run up into earnings as well. Is it going to move on earnings? You know, a lot of factors. A lot of factors need to play out for it to move on earnings. There needs to be a very massive, like, I don't even know what they could do. You know, buybacks maybe. You know, say they did a buyback at $20. Like, that would make it move. Maybe an acquisition. Maybe they bought Funko. Like, maybe they bought more Bitcoin at 80,000. You know, there's a few things they could do to make it move on earnings, but for the most part, I feel like you're getting your move into earnings already. Tough to say, though. Short-term price action is so hard to predict, bro. That's why you just, like, kind of just gotta not care. Especially if you're investing, you know. If you're trying to trade a little bit, it's still difficult. Like, it's not easy. Let's see how it reacts up at this high, though. I hate this shit, though. Like, I just want to analyze the volume profile, and they do this shit. I just want to analyze the volume profile, man. Just let me analyze it. They keep clapping it. I mean, I did. I mean, fuck it. Dude, I have so many shares. Like, it probably doesn't even matter. Realistically. Probably doesn't even matter. Like, you know, if it keeps going up, you know, I'll probably be like, oh, I probably shouldn't have sold those. But in reality, I don't think it matters if I take some profits on the way up. I don't think it really does anything. I think I already have a very overexposed position. And whether that's a good thing or not, that's very debatable. Anyway. Probably doesn't matter that amount of shares. I mean, it could. You know, I'm taking $100 profit, $50 profit, you know, 100, you know, maybe 150 at the most. If it goes to like $40, $50, you know, that's a $1,000 profit. So, you know, you're talking about the difference between $100, $200 profit and $1,000. So, like, you know, every 50 shares I sell does matter. But I do have a fuck ton of shares, so it also doesn't matter. It does, but it doesn't, you know? If you're looking out decades and you think this stock's going to go to triple digits, you know, selling 50 shares is not a smart move. It's actually really dumb to sell. But short-term price action, who knows what's going to happen, you know? Who knows? and you know, if it is going to go back to 20, I don't know. We'll see. It's not like you'd be sad about it. Oh yeah, probably not. Probably not. Like, I'll be honest, I legit had no cash for a while there. Well, I had like a few thousand, but like I had zero, like no cash. So to be able to raise cash right now is actually a blessing, I'll be honest. I'll be honest, being able to raise cash right now is a blessing. So I'll take it. Even if it does keep going up. Because also, you know, the higher it goes, the less likely it is that I'm going to sell. Like, if it starts pushing like 25, 30, my sells are going to be very infrequent, if at all. And maybe that's stupid, you know, maybe it's stupid to be selling in the lower mid-20s and then not selling in the higher 20s, but it's just when you start pushing those $30 levels, what if it never comes back? Like, that's how I feel about it. It almost seems more likely that it would sell back to 20 from the lower 20s than the high 20s, even though, you know, it's consistently sold back to 20 from the high 20s. So, yeah, I could be wrong. I probably am. But it is what it is. After I bought my car, I was at 2K cash for a while. I'm at 6K now because of my job. Nice. As long as you're comfortable with that, that's all that matters, bro. That's all that matters. I'm not, like, I personally, I need a little more cash than that, unfortunately. Like, I'm more comfortable at like 10, 20,000 range. But I also, you know, I also have like house fixes that I need to do in the future, and life is unpredictable, you know, anything's possible. So though I think GameStop is going to continue to go up and I think it's going to crush, having cash for me is valuable because life is unpredictable, anything's possible. And yeah. So, you know, having only like a few thousand of cash for me is like, oh, that's sketchy. Like, I didn't like it. I didn't like it. That's actually why I went all in the first place, is because I had so much cash. I was sitting on like 50, 60,000 of cash, you know, waiting for like if it broke 20. And, you know, from my analysis, I don't think it's ever going to break 20. So it's like, I was just like, fuck it. I'm going to go all in, see how I feel about it. You know, I've never been all in on stocks. I've always had cash. And I didn't really like the feeling, personally. Like, I'm still extremely, like, I think GameStop's going to work out and I think it's going to crush. But, like, not having cash for me is not, I just didn't like it. I just didn't like it, bro. I didn't like the feeling of, you know, what if something happens and I don't have any cash? Like, I didn't like it. So, you know, I'll sell a little bit on the way up, raise some cash, but ultimately my position is so massive, it probably doesn't matter much. It's probably actually the intelligent thing to do is sell a little bit. Probably the intelligent thing to do, but you know, we'll see. We'll see. Really speaking to my heart. Cash is king, baby. Cash is king, bro. I don't care what anyone says. A lot of people are cash haters, but cash is king. When your investment drops 50% and you have no cash, you know, I'd be interested to see how you feel. But if, you know, your investment drops 50% and you still got some cash, you'll probably feel pretty good about it. What's my target for GME? I don't have one. It's a long-term investment. It's going to go up forever. So to have a target on GameStop is some day trader bullshit. Only day traders and people who are trying to sell you a course are giving you a cash or a target. I think it's just going to go up over time. I don't know. Yeah, just up. Just up, exactly. Just up. Just up, baby. Cash makes it so we can weather the volatility. Exactly. And, you know, I don't really like it. Of course, you know, having cash for volatility is important, but for me, it's mostly just life is unpredictable. Like, I've never had, personally, I've always had a lot of cash for the past few years, and never have I actually used it for really anything. Like, there's been a couple times. There's been a couple times where I've needed to take like 2 or 3 grand out of my investment account and use it. But never in my life have I needed like $50,000-$60,000. You know? But at the same time, you know, having all that cash, if anything ever happens, you'll be fucking blessed. You know, you'll be feeling blessed that you have that cash. It's just not talking about stock volatility. Oh, okay. I get what you mean. Just volatility in general. Life volatility. I got you. Yeah, that's exactly what I mean. That's exactly what I mean. Story is basically mine to a large degree. I think we're very similar in some ways. In a lot of ways, potentially. I mean, it's why you stick around, I guess, right? It's because we see the same things. And not, you know, that's crazy to me because not very many people see what I see. You know? It's very rare. Very rare. Do you see what I see? Do you do what I do? What is that from? Is that like some Disney shit? Do you see what I see? Damn, we top ticked that cell, bro. Shit, son, we top ticked. Ooh, I mean, I'm sure it's gonna keep. Well, maybe it could not keep going up, but we did top tick that cell. I'm just saying. All right, let's keep going. Damn, this is the longest stream we've done in like months. This is crazy. This is a long stream. 2 hours? We're pushing 2 hours? One sec. I need to go grab a cold water from outside. My throat is clapped. Fuck, dude, I'm dying. I don't know if I'm going to be able to read all of these. I'll try to get through as much as I can, but I mean, at this point, you know, we're starting to get past where the squeeze was. So I don't know. You know, I don't know how relevant a lot of more of these earnings calls will be. And I just like being sick sucks. Good stream so far though. It's been fun. It's been a while. It's been a while. All right. So George Sherman. Okay. What is this again? Q1 2021. All right, bet. First quarter sales grew 25%. We entered the period with $771 million in cash, an increase of more than $185 million compared to last year. Throughout the first quarter, we also took a number of steps that align with our previously stated priorities. These include adding retail and technology talent to our leadership team by appointing a chief operating officer, chief growth officer, and chief technology officer. We also made a number of other senior hires across brand, merchandising, e-commerce, supply chain, and fulfillment. Each of these new additions has proven backgrounds and experience from companies such as Amazon, Google, and Intuit. Second, we further strengthened the company's balance sheet by raising more than $550 million in net proceeds from our April at the Money program. We also eliminated our long-term debt with a voluntary early redemption of our 2023 senior notes. Interesting. Third, we expanded our fulfillment network by adding a 700,000 square foot facility in York, Pennsylvania. This new distribution center, which is expected to be operational by the fourth quarter of this year, will enhance our order fulfillment capabilities on the East Coast. Lastly, we continue to expand our product offering by adding natural extensions such as PC gaming, computers, monitors, game tables, and gaming TVs, just to name a few. See, that's interesting that they thought that this would enhance their fulfillment capabilities, because it's, you know, I don't know because I don't live on the East Coast, but like I've shipped a lot of things, and shipping, you know, I live on the West Coast, and shipping stuff to the East Coast is only like 50 cents to $1 more, if that. So that kind of doesn't make any sense. Kind of doesn't make any sense. We intend to continue taking steps to evolve the business and build a world-class technology infrastructure while simultaneously capitalizing on the emerging console cycle. Today, we also announced a new at the money offering for a prospectus filing to offer up to 5 million shares of our common stock. Company intends to use any net proceeds for general corporate purposes as well as for investing in growth initiatives and further strengthening the balance sheet. Before I review the financial results for the quarter, I'd like to comment on this afternoon's press release announcing the hiring of a CEO and a permanent CFO. Okay, so this is where they hired Matt Furlong. Interesting. When was this released? June 9th? I want to see where the stock was trading, because I don't know, I forgot that they did an at the money back then. So I'd be curious to see at what price they did it at. What did I say? June 9th, 2021? June. Okay, wow. Wow. They did it at fucking $70? Holy. That's impressive. 70? No. 70? Holy shit. Why is GameStop the most impressive stock on the market, bro? Like in every single way. Or I shouldn't say stock, I should say business. That's fucking crazy. A $70 at the money. I mean, it's only 5 million shares, but still. Back then, that was like 10% of the float, I think, or like 8% or something like that. What's up, cat? All right. We intend to continue taking steps to evolve the business and build a world-class technology infrastructure while simultaneously capitalizing on the emerging consoles. Okay, I already read that. Okay, Matt Furlong, our incoming CEO, has an impressive background from Amazon, where he most recently led Australia and oversaw significant growth in that region. Matt is a proven e-commerce leader with a firm understanding how to delight customers. His focus, intensity, and work ethic will set the right tone to top the company as we begin shifting to a growth phase. He also brings a strong understanding of brand and retail from his tenure at Procter & Gamble, where he began his career. Mike Recupero, our incoming permanent CFO, also joined us from Amazon, where he was most recently CFO of North America, Consumer, and CFO of Prime Video. Mike spent nearly 2 decades at Amazon and held a variety of senior finance roles across the organization. His experience helping business lines scale and achieve market leadership is exactly what we need going forward. I look forward to working with Matt and Mike to ensure seamless transitions in the coming weeks. I also want to take this opportunity to thank Diana Jaget for her guidance and willingness to take on additional responsibilities during her time as interim CFO. Diana will return to her role as Chief Accounting Officer within the finance organization once Mike officially joins. Now, turning to our financial results, net sales the quarter were 25% to $1.3 billion compared to $1 billion in the prior year. Importantly, we achieved this growth with a roughly 12% reduction in the global store fleet due to our strategic densification efforts and the continued store closures in Europe during the quarter due to the COVID-19 pandemic. Overall, gross margins were 25.9%, down 180 basis points from 27.7%. In the fiscal first quarter of last year, the decline was primarily driven by an expected increase in mix of lower margin sales. From an SG&A perspective, our reported SG&A expenses were $373 million, reflecting a decline of $16 million, or 4% versus reported SG&A in the first quarter of last year, and an 880 basis point improvement on a percent of sale basis. It just shows handles now, not nicknames. Yeah, it's because people can put basically whatever they want as nicknames. You can't, handles are very specific. It's actually kind of nice. I'm sure, in some ways it's annoying, but it's also kind of nice because people can't just make their name be whatever they want, Adjusting for severance, transformation, and other costs, our adjusted SG&A declined $29.5 million, or 7.7% year over year, and reflects nearly 10 percentage points of sales leverage. We reported an operating loss of $40.8 million, compared to an operating loss of $108 million in the prior year's first quarter. Adjusted operating loss was $21.6 million, because to a loss of $98.8 million in the prior year period. Income tax in the first quarter was an expense of $1.3 million, which compares to an income tax expense of $50.4 million in the prior year first quarter. Our effective income tax rate for the quarter was 2% and impacted by valuation allowances recorded in prior periods, as well as the mix of earnings across the jurisdictions in which we operate. We reported a net loss of $66.8 million, compared to a net loss of $165 million in the prior year's first quarter. Our adjusted net loss was $29.4 million, compared to a net loss of $157 million in the prior year, or fiscal 2020's first quarter. Wait, what? Oh, okay. There's net loss and then there's adjusted net loss. Gotcha. First quarter, we continue to focus on strategically de-densifying our global store fleet, closing a net total of 118 stores in the quarter. Oh, interesting. So they were closing stores back here as well. At quarter end, we operated 4,698 stores across the globe. Turning the balance sheet, we ended the quarter with cash and restricted cash of $770 million, $186 million higher than the end of the first quarter of last year. Overall debt levels compared to the first quarter of last year were reduced by $504 million and reflect the redemption of $202 million of senior notes due in 2021. The voluntary early redemption of $216.4 million of 10% notes due in 2023, and the $135 million paydown of the company's asset-based revolving credit facility. Okay, so this is potentially where they started paying off a lot of debt. I mean, obviously we're going backwards, but kind of interesting. At the end of the quarter, we had no borrowings under our asset-based revolving credit facility, no long-term debt, and $48.1 million of short-term debt, which is a low-interest loan from the French government, offered to us through the CARES Act in the U.S. Capital expenditures for the quarter were $14.7 million. In the first quarter, cash flow from operating activities was an outflow of $18.8 million, an increase of $30.5 million, compared to an outflow of $49 million during the same period last year. In terms of our outlook, we remain optimistic about both the emerging console cycle and our future. We recognize business risks remain elevated due to the pandemic and post-pandemic uncertainty. We are not providing specific annual sales and earnings guidance. We are pleased with our start of the year and strong sales in May, which were up approximately 27% year over year. We remain focused on positioning GameStop for long-term growth as we prioritize delighting our customers and providing a differentiated and superior customer experience. Finally, given this is my last time speaking with you as GameStop CEO, I want to share that I'm very proud of what we've accomplished over the past 2 years, including navigating the pandemic and positioning the company with strong liquidity and an improved platform for growth. It's been a privilege to lead so many dedicated and talented team members who collectively possess a tremendous passion for the gaming industry. We've helped bring stability and strength into the business, including by defensifying our store footprint, reducing cost and debt, and returning our company to growth. I also want to take this opportunity to thank our customers for their belief in us, and an amazing group of shareholders who have so demonstratively exhibited their support for us. I look forward to working with our newly appointed board and leadership team going forward. Interesting. They didn't say a single thing about the squeeze. It's kind of interesting. Not a single thing about the squeeze. That's pretty interesting. All right, Q4 2020. Q4 2020. Is this where we're at? Yeah, I think we did Q1 2022. Or 2021. That was the last one we read. Yeah, the viewers are interesting. Interesting. Damn, I top ticked that cell. I'm so sick, bro. I am so sick. Not really, but anyway. Good afternoon. Blah, blah, blah. Fiscal 2020 was an unprecedented time. Our full year results reflect our organization's adaptness and focus on navigating the various operating challenges presented by the pandemic. I'm particularly proud of how our team members met the expectations of our customers by greeting them during curbside pickups, packing orders that ship from stores, assisting with online orders, and offering advice to customers in store. During this time, our top priority was safeguarding the health and well-being of our associates, customers, and communities. As you recall, we closed the majority of our global fleet during the height of the pandemic, resulting in a significant reduction in operating days compared to 2019. When stores were allowed to reopen, we operated under limited hours and at a reduced capacity in many locations, and in several of our operating countries returned to full store closure protocols later in the year. During this time, we worked diligently to plan for safe reopenings and introduce more members of GameStop's loyal customer base to our e-commerce capabilities. In terms of operational initiatives, we accomplished the following in fiscal 2020. We delivered a 191% increase in global e-commerce sales to represent approximately 29% of total net sales, up from a low single-digit percentage historically, and reflecting investment during that year had enhanced our e-commerce capabilities. This growth allowed us to recapture a substantial majority of our sales from temporary government-mandated store closings and leveraged our improved fulfillment capabilities, including the initial rollout of same-day delivery and several flexible payment options, which helped facilitate sales and improve the shopping and delivery experience. We delivered over a $400 million reduction in our reported year-over-year SG&A. This, combined with an SG&A reduction of $130 million in 2019, adjusted for severance and transformation costs, has resulted in a total SG&A decline of over $530 million over the last 2 years. We continue to transform our physical store presence through ongoing market optimization and global de-densification efforts. This resulted in closing a net 693 stores and reduced store operating costs for the year while transferring some of the sales online into neighboring locations. We enhanced our financial position and flexibility with a stronger balance sheet, reflecting significant improvements in inventory management and related working capital, healthy overall cash and liquidity position, a material reduction in overall debt, and the completion of an exchange offer for our March 2021 notes. Overall, we're pleased with the work we have accomplished to achieve our objectives and stabilize and strengthen our business operations. That work will continue, particularly as we explore options for our European businesses, which may include further store closings, exiting unprofitable businesses, or investing in e-commerce capabilities. As we go forward, we're focused on transforming into a customer-obsessed technology company that delights gamers. We're working to create a differentiated customer experience that positions us to access new customers, further engage with existing ones, and reactivate former ones. We are maintaining an intense focus on initiatives that drive customer lifetime value. That's kind of interesting, because I used to be a massive GameStop customer, and then, 10, 15 years later, here we are. I remember there was one time when I was like 17 or something. I literally pre-ordered every game for the year. It was like $700-800 or some shit. It was crazy. And then I didn't even end up playing most of the games because most of them weren't even that good. But I used to be an obsessed gamer. Absolutely obsessed. Steps we are taking to execute on this mission include 1, investing in technology capabilities, including by insourcing talent, revamping systems, and evaluating next-generation assets. We continue to build out our team expertise in this area, noting our recent addition of the Chief Technology Officer and Chief Operating Officer to the senior leadership team. 2, building superior customer experience, including establishing a US-based customer care operation. We are focused on providing exceptional customer service levels across all channels, regardless of where, when, or how our customers shop with us. We're accomplishing this through a technology-driven approach, along with leveraging our streamlined retail footprint to provide an unparalleled service proposition with a focus on surprising and delighting our customers. To this end, we have recently added a senior vice president level head of customer care and other new additions with e-commerce backgrounds to senior leadership team. 3, expanding our product offerings. We're continuing the work to expand our addressable market by growing GameStop's product catalog. This includes growing out our product offerings across PC gaming, computers, monitors, game tables, mobile gaming, and gaming TVs, to name only a few. It's crazy that collectibles have always been a thing at GameStop, but it wasn't like a big focus a few years ago. Now collectibles are like potentially the main focus. These categories represent natural extensions that our customers would expect to buy from us, expanding our addressable market size by over 5 times, and over time, we'll reduce our reliance on the cyclicality of the console-based gaming market. That's a good point. That's a very good point. 4, modernizing U.S. fulfillment operations to improve speed of delivery and service. We're improving our distribution network to coincide with the continued optimization of our store footprint. This will enable us to provide customers convenient, flexible, and competitive delivery options across the entire product spectrum. With our recent additions to the senior leadership team, we're quickly evaluating additional distribution options to improve delivery speed. The group is also working to further optimize our warehouse management and order management technologies and other capabilities that will improve the experience for our customers. We expect to accelerate these and other elements of our transformation while continuing to focus on allowing the company to build upon its progress and capitalize on the emerging console cycle. The progress we've made over the... I just lost my spot. The progress we made over the past 2 years positions GameStop for long-term growth and to deliver value for shareholders. Now turning to financial results. I'm very pleased with how we've navigated a challenging environment and all that we achieved in the fourth quarter in fiscal 2020. Specific to our fourth quarter results, sales were $2.1 billion and comp sales increased 6.5%, supported by mid-teens positive comparable sales in fiscal January. Global e-commerce sales increased 175% and represented 34% of total sales in the fourth quarter versus 12% of net sales in the prior year. Well, that's pretty interesting. These results were reflective of the increased console demand as we transition from Generation 8 to Generation 9 console gaming products from Microsoft and Sony. Our 6.5% comp growth marks our return to positive quarterly comp sales growth, which we achieved despite further COVID-19 mandate closures across the world, particularly in... that's so interesting. Most challenging industry-wide shipping crisis realized during the holiday period, and severe supply limitations of new products. God, I was, back then, man, I was not an educated investor. If I would have read this back then, I probably wouldn't even have, like, cared. It's crazy how things change when you, like, when you've just been in this game for, years. Alright, notably, console demand remains more robust than we can meet with supply from console makers, and as a result, we continue to see sell-through rates for our console events in a matter of minutes. In the fourth quarter, we estimate that additional pandemic-related store closures mandated by local governments led to a reduction of approximately 27% in European store operating days versus the prior year fourth quarter. Regionally, Australia was the strongest performing region given minimal disruptions at the stores and delivered a nearly 30% comp increase. Yep. Australia had the lightest COVID mandates, if they even had any at all. I don't really know. Building on that momentum, 2021 is off to a great start, led by positive 23% comparable sales in February, as we continue to benefit from the launch of new consoles and the accessories and games that come with that product. Further, total consolidated sales for February were up 5.3% versus last year, despite having permanently closed about 12% of stores globally through de-densification efforts and losing over 36% of the store operating days in our international business. International business units. Primarily in Europe, due to the pandemic-related temporary closures in the month, from a product margin standpoint, overall gross margins were 21.1%, down 610 basis points from our more software-led 27.2% gross margin in fiscal fourth quarter last year. Decline was driven by an expected increase in mix of lower margin hardware sales, continued increase in industry-wide freight costs, credit card processing fees driven by our higher penetration of e-commerce sales, and a broader promotional stance. just crazy how, like, I don't know. I've just learned so much the past, like, year or two. It's crazy to think that if I just kept my, like, day trading risk management mentality, I wouldn't understand business as properly as I do now. It would have just all been about the chart and trading and gambling, basically. But I don't know, my business knowledge is crazy the past couple years. And reading this, like, I can see I can see why this was such a proper investment, even though they were losing so much money before the squeeze. I can see it. You know, it could be hindsight. It definitely could be hindsight. But I definitely see it. Anyway. Now turning to our expenses and expense management objectives. Our reported SG&A expenses were $419 million, reflecting a decline of approximately $92.6 million, or 18.1% versus the reported SG&A in the fourth quarter last year, and representing approximately 340 basis point improvement on a percent of sales basis. The decrease was driven by a combination of tight expense controls, particularly lower store costs, and corporate G&A expense, and to a lesser extent, sales leverage. On an adjusted basis, SG&A declined $68.4 million, or 14.1% year over year. And it just makes sense why so many people are so bearish on GameStop, because I think a lot of people in the stock market aren't like business people. I think they're just people who look at the chart and they click the fucking button. You know, I don't know how many people are like truly educated on business. And you know, I'm sure I still have a ton to learn, but the little I have learned, a lot of people don't go that route. You know, a lot of people only trade. They only look at the chart. Kind of interesting. We reported operating income of $18.8 million on a reported basis compared to operating income of $75.2 million in the prior year fourth quarter. Adjusted operating income was $28.9 million compared to $109.2 million in the prior year period. Income tax in the fourth quarter was a benefit of $69.7 million, driven by a change in the tax status of certain foreign entities based on a certain check-the-box elections that we made, along with the impact of the CARES Act, which allowed for a 5-year carryback period for certain current year tax losses. This tax benefit compares to an income tax expense of $43.8 million in the prior year fourth quarter. And isn't it funny? There was like, literally, not even joking, right before I was talking shit on traders. I mean, I wasn't really talking shit, but right before, literally, we had 12 people in here. The second I talk shit on traders and people who only look at a chart, we got 5 viewers in here now. Like, if that goes to show you, I don't know. I don't know what that shows you, but that just, to me, that shows me that there are a lot of people who only look at the chart. And when you call them out, they get butthurt. Because reality is, you know, they can't accept reality. They think that just because they made like a nice trade one time or a couple times, they think that this is it, bro. Trading's the way, man. I'm gonna get rich from trading. Like, probably not. Probably not. Also, GameStop could be dropping. I haven't looked at it. It's at $23 still. Looks good to me. On a reported basis, net income was, you know, it's really interesting if you think about it through a market cap perspective. Like a week or two ago, the market was pricing in that GameStop was only going to have like $9 billion-ish in cash. Now the market is pricing in that they're going to have over $10 billion. If you're looking at it that way, which could be a fair way to look at it, because you did bounce right off the cash position, or where the cash position is. But now the market's pricing in 10 billion, which is pretty interesting. On a reported basis, net income was 80.5 million on 67.8 million shares, compared to net income 21 million, or earnings per diluted share of 32 cents prior fourth quarter. Adjusted net income was 90.7 million, compared to adjusted net income of 83.8 million on fiscal 19 fourth quarter. In the fourth quarter, we continued to focus on de-densifying and streamlining our global store fleet. We closed a net total of 232 stores in the quarter for a total of 693 closures in fiscal 2020. Wow, that's a lot of store closures. It's very interesting. Very interesting. Year end, we operated 4,816 global stores. Now turning to our full year results. Total consolidated sales were 5.1 billion, a decline of 21.3% over the prior year. The sales decline was attributable to a comp store sales decline of 9.5%, approximately 700 permanent global store closures, disruptions from the pandemic around the world, including temporary store closures, vendor supply shortages, and the new Generation 9 hardware, and a lack of new products at the end of Generation 8 cycle. Oh, interesting. E-commerce sales increased 191% for the fiscal year to represent nearly 30% of total net sales. Gross margin for a fiscal year decreased 480 basis points to 24.7% from 29.5% in 2019. SG&A expenses for fiscal year were 1.5 billion, reflecting a decline of 408 million. On an adjusted basis, SG&A declined 348 million. Importantly, these expenses include approximately 25 million in COVID-related safety protocol costs. As we've said before, we continue to expect more than 2/3 of these reductions to be permanent, as they relate to permanent closures of stores and related labor costs associated with our de-densification strategy. We reported an operating loss of 237.8 million, compared to an operating loss of 399.6 million in the prior year. Adjusted operating loss was 238 million, compared to operating income of 62.3 million in the prior year. Okay. Income tax for that year was benefit of 55.3 million, driven by the changes in tax status of certain foreign entities and the impact of certain carryback provisions of the CARES Act previously mentioned. This tax benefit compares to an income tax expense of 37.6 million in the prior year. Our effective tax rate for the year was 18.9%. Importantly, we believe these tax elections will yield between 125 million and 150 million in cash tax benefit to be received early next fiscal year. On a reported basis, our net loss was 215.3 million. Wow, that's a massive loss per share, 3.31. Compared to a net loss of 470.9 million, wow, their losses were crazy back then. Our adjusted net loss was 138.8 million, or a loss of 214 per diluted share, to an adjusted net income of 19.1 million. See, I think prior to this, they were only profitable, which is crazy. Turning the balance sheet at the end of fiscal year, we had cash and restricted cash of 635 million, 121.5 million higher than the end of last year, reflecting our continued efforts to optimize working capital and overall capitalization of our balance sheet. We ended the year with total inventory of 602 million, a 30% reduction from prior year inventory levels of 859 million. As a result of our ongoing inventory management efforts, our inventory efficiency continued to improve for the fourth quarter, as we realized a trailing 12-month inventory turn of 5.9x times versus 4.4 times at the end of 2019. At the end of 2020, our balance sheet and liquidity position were significantly improved versus 2019 despite the impact of the pandemic. This was a result of actions we took to strengthen our financial health in 2020, including completion of an exchange offer and solicitation for $216 million of our unsecured notes, reducing the amount due to mature in 2021. The execution of 5 sale-leaseback transactions related to office buildings and the sale of a corporate travel asset contributing approximately $95 million towards total liquidity, the reduction of overall debt for the year by $57 million, including the early redemption of $125 million of our remaining 2020 notes, or March 2021 notes. Yeah, this is a long thing. Additionally, as of March 15th, 2021, we fully redeemed the remaining $73 million of 2021 notes and repaid the outstanding balance of $25 million on our ABL. Capital expenditures for the year were $60 million, at the low end of our previously provided guidance of $60 million to $65 million. In fiscal 2020, cash flow from operating activities was an inflow of $123.7 million, an increase of $538.2 million, compared to an outflow of $414.5 million during the same period last year. The increase was primarily due to improvements in working capital as a result of optimizing inventory and accounts payable levels through maximizing the cash conversion cycle and a more efficient carrying levels of inventory. In terms of our outlook, we're optimistic about our transformation in the emerging console cycle. We recognize business risks remain elevated due to the pandemic and post-pandemic uncertainty. We are not providing specific annual sales and earnings guidance. In summary, 2020 was an unprecedented year, but we are very proud of all that we have accomplished to advance our strategic priorities and enhance our financial health. We finished 2020 a stronger company and are well positioned to capitalize on opportunities ahead of us in 2021. As we move to the next phase of our transformation, GameStop is the only retailer of scale exclusively focused on the gaming industry and adjacent categories. We have a unique opportunity to become the ultimate destination for gamers. I want to take a moment to address several changes in our leadership. As you know, we announced in February that Jim Bell was stepping down from the CFO role with the company later this week. I want to thank him for his significant contribution to our company during the stabilization and optimization phases of our transformation, particularly his leadership in managing several $100 million in expense reductions and over $350 million from working capital generation. We also announced this week that Frank Hamlin, our Chief Customer Officer, is leaving the company, and I'm very appreciative of his leadership and efforts over the last couple of years of our transformation. Specifically, is spearheading the concept development and execution of our Tulsa project of interactive gaming stores. Finally, we are excited to welcome Jenna Owens as our new Chief Operating Officer. We believe Jenna's extensive career in technology-led organizations such as Amazon and Google are another important addition to our leadership team and our future transformation initiatives. Thank you again for your support and interest in GameStop. We remain very excited about the momentum we have, the many positive changes we are making, and the talent we are attracting to GameStop, all of which we believe will deliver long-term value creation for stakeholders. No mention of Ryan Cohen at all in the earnings calls. Kind of interesting. I mean, he is just he's not even a board member at this point, but I'm surprised he didn't get any mention at all. How many more of these do we have? What was that? That was Q4 2020. We only have a few more. I might as well just read them all. Might as well. One sec, though. Don't die. Probably won't. I'm pretty sick. I mean, not really sick anymore. We're just at the tail end of sickness. The tail end. Alright. Holy shit. These ones are long, bro. Good lord. These ones are hella long. What's up, Elvis? Alright. So this is Q3 2020? Yep. We've made significant strides in stabilizing and optimizing our core operations and are excited about the transformational plan we are executing that will enable us to create long-term value as our industry continues its rapid growth. Our third quarter results were largely as we anticipated, making the end of a challenging sales performance period as the industry transitions from Generation 8 to Generation 9 console video game products. The transition, coupled with the impact of the global pandemic on consumer retail mobility, and also to some extent supply chain disruptions, is now segueing into what we see as a period of sustained growth, the beginnings of which I'll highlight in a moment. First, to summarize the third quarter, as we anticipated, sales and profitability were down. The profitable store sales declining 24% and an adjusted loss of 0.53 per share. But that notwithstanding, we saw 257% growth in our e-commerce sales versus the prior year, reflecting investment during that year that enhanced our omni-channel capabilities. We continue to reduce expenses, delivering over $315 million in SG&A expense reduction so far this year. And we're pleased to end the quarter with almost $300 million more in cash, the restricted cash compared to the end of the prior year third quarter. And as I mentioned, we made significant strides in stabilizing and optimizing our core operations over the last 15 months. And we're excited about the plans we're executing for the rapid evolution of GameStop. Despite the unprecedented environment during the global pandemic, our strong performance in November shows not only where we are, but the rapid pace of our transformation, beginning with cost reduction and significantly improved balance sheet delivered by ongoing work. Followed by the console launch in early November, and now our focus on key transformational strategies that will power future growth. Our goal is simple. We're positioning GameStop to be the leading global omni-channel retailer for all things gaming and entertainment. We're encouraged by our successful efforts in 2020 to begin category and product extensions that increase our addressable market, as well as by our customers' early response to an expanded products and services offering. At the forefront of this strategy is a digital-first approach focused on delivering a best-in-class e-commerce experience, along with an optimized retail footprint. Together with an enhanced fulfillment options, they provide our customers with the most comprehensive set of games and entertainment products and events wherever, however, and whenever they want them. The current console-based video game products are an important element of our strategy over the next few years, and we realize that very successful launch of our next generation products in November, driving 16.5% growth in comparable store sales. This was the first positive comparable store sales month in nearly 2 years. Despite being closed on Thanksgiving Day in North America and the ongoing negative impact of COVID-19, which saw the closure of the vast majority of our European storefronts for the entire month. In addition to appeal the next generation of consoles, these results also reflect the significant improvements we have already made to performance of our omni-channel platform, as global online sales in the month of November grew 352%. In line with these early results, we expect to generate strong sales growth and profitability in the final quarter of the year. Let's review some of the additional highlights for the third quarter. Jim will share some of the specific details of the quarter, but broadly speaking, our global store fleet saw on and off periods of store closure or restricted access to customers, particularly as COVID-19 cases accelerated around the world in October and then through November. We believe the pandemic and importantly the depression of retail customer mobility lowered our comparable sales in the third quarter by 3 to 5 percentage points, Pivoting to our strategic accomplishments in the quarter, we continue to optimize our core business by improving efficiency and effectiveness across the organization, leading to a reduction in the SG&A expenses of nearly $115 million for the quarter, bringing our total for the year to over $315 million versus 2019, roughly 2/3 of which we view as permanent. We continue to work quickly to optimize our omni-channel capabilities through the transformation of our physical store presence. Through the third quarter, we have closed almost 800 stores worldwide since the beginning of 2019, representing both underperforming locations and de-densification in certain trade areas. We expect these closures to create a more profitable footprint. Dude, that's so interesting. It's so interesting that before the squeeze, it was all about trying to create profitability. And then after the squeeze, they were trying revenue growth. And then, Ryan Cohen took over, and now you see what they're doing now, but very interesting. In the US, we continue to see strong sales and profit transferred to neighboring locations and e-commerce, an important point in supporting the continued optimization of our store fleet. Consumer affinity for our continually improving e-commerce experience and the ease of shopping and same-day delivery of our omni-channel fulfillment is increasing efficiency across the store footprint. By the end of fiscal year, we'll close over 1,000 stores since we began this optimization journey in the middle of 2019, all with little to no capital outlay. Given the strength of our e-commerce sales and omni-channel capabilities, which I'll comment on momentarily, we now see the opportunity to close additional stores going forward in 2021 and 2022 as we optimize the profitability of omni-channel architecture. Overall, our goal is to serve our customers wherever, whenever, and however they choose to shop. We continue to improve our balance sheet. What's going on with the chart on my stream is like glitched out. Whatever. We again improved working capital management with a 33% reduction in inventory and a 38% decline in accounts payable. Ending the period was $603 million of cash and restricted cash, about $300 million more than the prior year's third quarter. Finally, as a result of the continued strength of our balance sheet, we further enhance our capital structure with the announcements for voluntary early redemption of $125 million for approximately 63% of our outstanding notes due in 2021. As you know, we remain very committed to our efforts to build a frictionless, digital-first omni-channel ecosystem, and our customers are responding, significantly changing the way they shop with us. Our focus on customer centricity and the best end-to-end customer experience has led to recent material gains in our e-commerce business, and we expect to build on this success, reinforcing the core focus of our go-forward strategy. In the third quarter, we delivered a 257% increase in e-commerce sales versus the prior year, fueled by our elevated omni-channel capabilities. E-commerce penetration continued to grow and represents nearly 25% of total sales this year, up from a low single-digit percentage historically. We're also leveraging our expanded fulfillment capabilities such as curbside pickup, buy online pickup in store, ship in store, and in the third quarter we rolled out same-day delivery for online transactions to 2,000 locations and now have that option available in all of our US stores. Given a relatively high average transaction size, we can profitably partner with last-mile delivery services to provide customers with same-day delivery. Our new mobile app, which launched fully in October, is much more engaging with the previous version and provides newly available functionality and dramatically improved customer experience. The app is customizable, enables customers to personalize features, select same-day delivery options, and browse a curated deal hub. With more people downloading and using the app on a weekly basis and engaging with it for longer periods of time, we've seen significant increase in engagement within the transactions, a 30% increase in conversion. So interesting. With the increased usage, e-commerce sales originating from the app have now doubled. We're very pleased with the initial performance and look forward to rolling out additional features such as the gamer news feed and a comprehensive, easy-to-use digital wallet in 2021. Going forward, you'll see us leverage our GameStop ecosystem of stores, e-commerce, and our app to deliver an enhanced 360-degree experience for consumers with products and services that are more relevant to how they connect and play in devices today and in the future, all with a focus on driving customer lifetime value. These efforts have already resulted in, and we believe will continue to lead to higher conversion, basket size, frequency of purchase, as well as a new customer acquisition for our Power Up loyalty program. As you appreciate, these are very encouraging metrics. The progress we made during the quarter on our strategic initiatives, despite the COVID-19 backdrop, largely completes our optimization and stabilization phases of our strategy, which we've been working on over the last 15 months, and positions us for the next phase of transformation. Before discussing our future plans and opportunities, I'd like to quickly review the material accomplishments that we set out to achieve the launch of GameStop Reboot just 15 months ago. In that time, we've optimized the physical store presence through the ongoing de-densification and have closed over 1,000 stores by the end of 2020. We exited unprofitable businesses in the 4 Nordic countries and divested of the Simply Mac business unit. We continue to take costs out of the business, significantly reducing SG&A by $316 billion year to date and over $440 million from our starting point in the middle of 2019. We increased productivity with an improved store labor strategy, investing in our e-commerce platform, driving for 433% growth in the channel to nearly 25% of sales year to date. We improve inventory management, faster turns, delivering well over $300 million in working capital benefits, key to our ability to definitively navigate this pandemic. Definitely. We monetized several assets, including sale of the leaseback transactions for 5 office buildings and the sale of our corporate jet, adding over $95 million in liquidity. We enhanced our financial flexibility with the completion of an exchange offer and consensual citations for $216.4 million of our unsecured notes, reducing the amount due to mature at March 2021 to approximately $198 million, of which we have already announced the voluntary early redemption of $125 million. By March, we have reduced the overall debt on our balance sheet by almost $600 million since early 2019. We have purchased 38.1 million shares since the spring of 2019, approximately 37% of our shares outstanding at the time at a weighted average price of $5.21. Holy shit. That's fucking legendary. That is legendary. That's legendary right there. I really wonder if they're going to do buybacks. Because you hit you hit $20. Like, that's about what the cash is. It would make sense for him to do buybacks. But I guess we'll see. We significantly expanded our customer payment options, including elevated focus on private label credit card, adding several buy now, pay later options, and launch rent-to-own options to complete the payment stack. Oh, that's sick. As we enter the fourth quarter, we have several tailwinds that set us up to win during the holiday season, starting with a new console cycle and including our digital omni-channel acceleration. But to be clear, we're not focusing on the console video game market. And we're expanding the spectrum of products and services we sell to position GameStop to be a worldwide leader of games and entertainment for our customers. As many of you've seen, we've begun to expand our SKUs to include PC gaming, computers, monitors, game tables, and gaming TVs, to name only a few. Many of these SKUs will continue to be online exclusives. PC hardware and accessories represent a major market opportunity, in industry research by NPD shows the large majority of console gamers also play PC. Our overarching goal is to leverage the power and competitive advantages of our brand, significant loyalty base, dedicated and experienced sales associates, and expensive omni-channel capabilities to drive lifetime value across all things games and entertainment. As customers evolve the way they play, we are evolving with them, expanding our addressable market as we expand our suite of products and services to meet their needs. In closing, as we look back over 5 quarters since launching GameStop Reboot, we are very proud of the tenacity of our teams to not only produce meaningful results during the stabilize and optimize stages of our plan, but to do so all while delivering our products and services to our customers, and doing so in the middle of an unprecedented business disruption caused by the global pandemic. We have made advancements that have begun to return our business to sales growth and profitability, while enabling us to undertake significant transformational work we now have underway. As we look to next year and beyond, we're confident in our strategic plans and transformation of improved results and long-term sustainable growth at GameStop. Dude, this was before the fucking squeeze, wasn't it? Yeah, this was just like a month before. Holy shit. Wait, right? I can't remember when the squeeze was. I forget. I forget, but I'm pretty sure that's like a few months before. Or a month before, I should say. Yeah, December 8th. Crazy. Crazy, dude. Oh my god. Wouldn't it have been nice to be an educated investor back then? You didn't even fucking need Roaring Kitty or anyone. All you had to do was like be somewhat educated on business and be paying attention. Crazy. Crazy. Okay. So Jim Bell. Thank you, George. Good afternoon, everyone. I'd like to take this time to walk you through our third quarter fiscal 2020 results, and then I'll share some insights into the success of the new video console launch and how we're approaching the fourth quarter. As George discussed, we advanced our strategy in the third quarter, making significant progress on our near-term goals of optimizing our core business by reducing expenses, improving our inventory management, and strengthening our balance sheet and capital structure, and we did so while continuing to focus on transforming GameStop for the future to deliver profitable long-term growth. While the third quarter is behind us, we are intently focused on maximizing all that the new console cycle has to offer. Expanding our foundational work on our elevated omni-channel platform and more efficient operating model, and quickly but methodically evolving the business to expand our addressable market and support our long-term growth and profit objectives. As the gaming consumer and industry evolve, we see an opportunity to expand our addressable market, honor historic predominant focus on the console video game market, with a comprehensive suite of product offerings and new services across all categories for games and entertainment, and simply put, we're making it easier for consumers to find what they need at GameStop in an intuitive, relevant, and frictionless shopping experience, all while taking a leadership role across the gaming entertainment categories. Economically, this means adding incremental purchase occasions with higher margin lines of business, and therefore capturing greater share of wallet. Let me turn to the review of the third fiscal quarter. As George mentioned, our third quarter sales performance was expected as we transitioned through the final quarter of the Generation 8 console video game cycle, which included the shift of many software titles into the fourth quarter of this year and even into 2021. Further, we realized some top-line softness in October as COVID-19 cases spikes drove retail consumer mobility down. Our consolidated global sale for third quarter was $1 billion, below the third quarter, or 30% below third quarter of 2019. The decline was a combination of the negative 24.6 comparable store sales, the impact of both foreclosures and lower retail customer mobility through most of our operating countries, and the impact of operating 607 fewer stores as part of our strategy to exit unprofitable businesses and optimize our store fleet through de-densification. We continue to see strong sales and profit transfer rates from the de-densification strategy. Geographically, our Australia and New Zealand business unit continue to perform very well relative to other regions, delivering a slight increase in sales for the quarter. Damn, it's already 1:30. Holy shit, this is a 3-hour stream? Bro, this is the longest stream we've done in so long. A 3-hour stream? That's nuts. See, if I actually have stuff to like do, it's pretty easy to do these long streams. It's just most of the time there's nothing to talk about or anything. It's important to note that performance in this region is driven by very little reduction in store operating days, as the COVID-related retail operating mandates have generally not required full closure or limited access, except for short periods of time. In terms of category performance, hardware and accessories declined 24% for the quarter, an expected slight deceleration from the second quarter, largely reflected a lack of hardware product in the marketplace. Ahead of the launch of the new console, much of which was pulled forward into the second quarter. Despite this, Nintendo Switch continued to perform extremely well, increasing significantly compared to last year, and we continue to leverage our pre-owned inventory to drive sales. Software was down 39% for the quarter versus 2019. A deceleration from the second quarter was driven by the lack of title launches, most of which shifted later into the fourth quarter and into 2021. Notably, Call of Duty launched in the third quarter of last year. Compared to the fourth quarter of this year, our collectible business was down 9% for the quarter, which represents a significant improvement sequentially from the second quarter performance, as we realize the benefit of store traffic as stores begin reopening during the quarter after being closed during the second. From product margin standpoint, overall gross margins declined as the increase in mix of higher margin collectible sales was more than offset by the mix of lower margin hardware sales and an increase in industry-wide freight costs and credit card processing fees, driven by a higher penetration of e-commerce sales. Our overall too much reading. Our overall global gross margins were 27.5%, down 320 basis points from our more software-led 30.7% in the fiscal third quarter last year. Now turning to our expenses and expense management objectives, our reported SG&A expenses were $360 million, reflecting a decline of approximately $115 million. Holy shit, this is so long. I lost my spot. I shouldn't have done that. Is this my spot? Yeah. Total year-to-date SG&A reductions reached over $315 million at the end of the third quarter, ahead of our expectations. Importantly, we continue to expect about 2/3 of these reductions to be permanent, reflecting our ongoing efforts to aggressively rationalize the overall cost structure of our business. While we expect some of these variable costs come back in future quarters as we return to more normalized operations of our stores and distribution centers, we're also steadfastly focused on further operational efficiencies to create additional permanent expense reductions in the future. To this end, we have more than doubled the original annual cost reductions we expect as a result of these actions we took as part of Reboot Initiative, which began 2019. We reported an operating loss of $63 million compared to the operating loss of $45 million in the prior year. Income tax in the third quarter was a benefit of $53.9 million, driven by a change in the tax status of certain foreign entities that we've elected and the impact of the CARES Act, which allowed for 5-year carryback period for certain current year tax losses. This tax benefit compares to an income tax expense of $31.6 million in the prior year third quarter. Our effective tax rate for the quarter was 74.1%. On a reported basis, our net loss was $18.8 million, or compared to a net loss of $83 million. Adjusted net loss, including the gain of sale of assets related to sale-leaseback transactions, with $34.4 million, compared to adjusted net loss of $40.2 million. During the third quarter, we continue to focus on optimizing our global store fleet, strategically identifying certain markets for the quarter. We closed a net total of 74 stores, bringing our total to 461 closures year to date. They had so many stores. At the end of the quarter, we operated 5,048 stores, or 607 fewer compared to the end of the third quarter last year. Given the strong sales and profit transfer rates we continue to experience, we're on track to close nearly 700 stores in total this fiscal year and over 1,000 stores worldwide since we began this part of our strategy in 2019. Importantly, we're completing these closures generally with little to no capital outlay to do so. Now, turning to our balance sheet, which continues to be an area of focus for the team, at the end of fiscal third quarter, we had total cash and restricted cash of $602 million, almost $300 million higher than at the end of the third quarter last year, reflecting our continued efforts to optimize working capital. Additionally, during the quarter, we completed the sale-leaseback transactions to the remaining 2 office buildings being offered, contributing $43 million toward total liquidity. Accounts payable at the quarter end were $44.2 million, down from $709 million at the end of the third quarter last year. What? I don't know if that's a typo or not, but that's fucking crazy if that's how... It must be a typo. Either way, reflecting 38% reduction, which is directly related to our ability to leverage a flexible supply chain and improve our inventory management. We ended the third quarter with total inventory of $861 million compared to $1.286 million in the prior year period, a reduction of 33%. Inventory efficiency in the third quarter continues to improve, as we realize the trailing 12 months inventory turns of 4.7 times from 4.1 times this time last year. 3-hour stream. Goodness gracious. A 3-hour stream. That's long. That's a long stream. I don't know. If the other earnings things are this long, I don't know if I'm going to read them, I'll be honest. We're pretty much at the point where I wanted to be. These are way too long. Okay. During the third quarter, we've reduced outstanding borrowings under the asset-based revolving credit facility by about $10 million, down to $25 million outstanding. At the end of the third quarter, we had $269 million of short-term debt and $216 million of long-term debt on the balance sheet. Subsequent to the quarter end, we announced the voluntary early redemption of $125 million in principal amount of senior notes due 2021. Redemption will take place on December 11th, 2020, and covers approximately 63% of outstanding notes. Voluntary early redemption is consistent with our actions to strengthen and enhance our balance sheet, improve our debt profile, and optimize our capital structure. In the third quarter, we had $15.1 million of capital expenditures, and we continue to focus our capital spending on near-term, high-value strategic projects and mend for maintenance, and still anticipate that we'll invest approximately $60 million to $65 million in CapEx for the year, some of which is offset by our various vendor support programs. Separately today, we also filed a shelf registration statement and established a related optional aftermarket program to offer and sell up to $100 million of additional common stock. As I noted several times this year, we're extremely pleased with the results we have achieved to strengthen our balance sheet and advance our strategic objectives. And we believe we have more than sufficient liquidity and balance sheet strength to continue to execute on these endeavors, as well as navigate through any potential unknown or extended pandemic effects. As such, the timing and amount of sales of shares under the program, if any, will depend on a variety of factors, including prevailing market conditions, the trading price of shares, and other factors we need to determine. However, as a pragmatic matter, initiating this program provides us with maximum flexibility and optionality to further bolster our balance sheet and liquidity position, and increased flexibility gives us the ability to leverage opportunities to accelerate our transformational strategies, such as increasing the speed at which we expand our omni-channel strategy, while further ensuring minimal disruptions from any potential pandemic impacts around the world. Before moving to our fourth quarter outlook, I want to spend a few minutes highlighting the initial results of the console launches that occurred in November. By all accounts, these consoles are experiencing unprecedented demand, and we continue to work with the suppliers to meet that demand. Importantly, we continue to be able to achieve attachment rates for first-party and third-party software and accessories that are, in most cases, more than 2 times that of any other competitor, which is leading us to have opportunities to get additional allocations for these high-demand consoles. Interesting. I wonder if that's similar with Pokemon. I wonder if, what is it? I lost it. What did it say? Where did it go? I'm just going to read the whole thing again. These consoles are experiencing unprecedented demand, which Pokemon's experiencing unprecedented demand. We continue to work with the suppliers to meet demand. Importantly, we continue to be able to achieve attachment rates for first-party and third-party software and accessories that are, in most cases, more than 2 times that of any other competitor, which is leading us to have opportunities to get additional allocation for these high-demand consoles. Given the strength of our performance so far with the console launch, we expect strong sales growth and profitability in the fourth quarter, something we have not seen in quite a few quarters. As George mentioned, November comparable store sales increased to 16.5%, despite the impact of foreclosures throughout most of Europe and part of Canada in November. In addition, our customers continue to respond favorably to our improved e-commerce experience, including our new app and flexibility of new fulfillment and payment options. I got the hiccups. Within our elevated omni-channel eco. As a result, year-over-year e-commerce sales grew 352% in November versus the same month last year. Despite the strong start of the fourth quarter, given the uncertainty around the evolving impact of COVID-19, we're continuing to suspend guidance. As mentioned, we have seen varying levels of closures across our international operations, particularly in Europe. And as things remain very fluid in the US, temporary store closures due to COVID-19 could be likely heading into the rest of December and January. Keep in mind, the comparable store sales exclude the impact of permanent store closures and locations closed 14 contiguous days or more due to the pandemic. Before I conclude, I wanted to elaborate a little further on our real estate strategy and efforts to optimize our fleet, especially de-densification over stored markets, and how we're approaching further actions. Looking at 2019 and 2020 combined, okay, I see. We'll have over 1,000 stores over the time frame, with 300 in 2019 and nearly 720 in 2020. And importantly, have spent little to no capital to do so. With our investments improving our omni-channel capabilities, including hiring almost 30 professionals with extensive digital experience, coupled with the impact that COVID-19 has had on our customers' desire to experience GameStop across our digital platforms, we've seen opportunity to further optimize a fleet in the coming year or two. These efforts come with the EBITDA improvement, and we have had a very flexible store based in terms of lease expirations, and that will enable us to close stores at very little cost to the business. We'll update you further on these objectives during our fourth quarter and fiscal year end earnings conference call. In summary, we're off to a great start for the holiday, and our associates are energized by buzz and excitement generated by the console launch. We have long said that the newness in consoles and software drive our business, and we see that playing out now. While we are not now benefiting from a nice tailwind, we're equally focused on transforming our company for the future and believe we have the right initiatives in place to achieve this goal. Reshaping GameStop for effective market reach and offering a broader range of products and services in a games and entertainment space. In the short term, we'll remain intently focused on continuing to improve our financial architecture. But today, GameStop is a meaningfully more efficient, streamlined organization than it was 15 months ago. Due to all the hard work that our teams have done as part of stabilization and optimization components of our strategy, as a result, we believe we're posed to capitalize on significant profit flow through improvement as we experience sales growth, led by both the Generation 9 console launch and expected new software title slate, as well as the expansion of the transformation phase of our strategy and many exciting category product extensions and services. We'll bring it into our ecosystem in 2021 and beyond. I'll now turn the call over to our operator, who will take questions. I don't know if I want to read the Q&A. I don't know if I want to read this. It's just so much. I'm losing it. I don't even know if I physically can keep reading. Straight up. Let me see how long the other ones are real quick. Because I might be done reading this here. My throat is cooked, bro. That was too much reading. I don't know what I'm doing to myself. And I don't even remember what I was on. Q3 2021. There's only 2 more, I think. Oh, wait. Oh, this is 2020. Wait, I'm confused. That's not it. That's not it. Maybe I was on Q3 2020? I don't even know. I don't even know, dude. I forgot what I was on. I think it's Q3 2020. Pretty sure. What the hell is happening? I lost the page. I don't know what happened. Dude, I don't know if I can read anymore. Not 2021. Where the fuck is it? Oh, right here. Found it. Oh, shit. Wrong button. What the hell happened? The website, like... I'm so confused. Whatever. I guess that's our... I guess, whatever. I guess, I fucked up. But... Oh, well. We got what we wanted. I read up to where I really wanted to read. I would have read more, maybe, but the website's being stupid, so maybe I'll just, I don't know. Maybe I'll read the rest on my own time or something. Uh, 15 minutes till the close. There's a whopping 3 people in the stream. There's a lot of people here earlier when we were in the higher, or when we were pushing 23. It was actually a decent stream today for how slow and terrible the stream's been for the past month or 2. Not bad, not bad. I don't know if I want to wait around here for 15 more minutes, though. Let's see if there's anything to talk about for 15 minutes. I imagine no. Damn. How come everyone else gets nice pulls on power packs? I only get wrecked. I only get wrecked. How many of these people do you think actually invest in GameStop? Probably it's very debatable for me. I feel like a lot of these people don't even invest. Okay, nothing there, apparently. I'd imagine if Michael Burry posted something on his Substack, they'd post it on Reddit. He did post something on his Substack. How come nobody posted that? Can I don't think... Oh, this one's not locked. Hell yeah. This isn't locked. Sick. Can we... No way. No way. We get to listen to something? Oh, I love that. The fact that I don't have to read. So I'll read what this is. Let's see. Michael Lewis is the author behind The Big Short, as well as Liar's Poker Money, Blindside, and The Flash Boys. Very recently, I sat with Michael for the first time in many years. Michael interviewed me over 40 minutes, and that interview drops today. The Big Short Against the Rules companion podcast is available on Apple, blah, blah, blah. I refused Michael's first request to do this, and there were other times over the years where I demurred when asked by Michael to talk. I believe the last time I spoke publicly was June 2012 for the UCLA commencement. Oh, wow. My intent was never to speak publicly again. Perhaps this is the reason the copy says I was least likely to grant Michael Lewis an interview. Of all the characters in The Big Short, fund manager Michael Burry, depicted by Chris... 36... I might start a new stream for this. I think I'm going to end this stream and go like eat something or something real quick. Go chill. And I think I'm going to restart the stream and have a complete separate thing for this. So, appreciate you guys being here. I'll if you want to come back here in a few, I'll be getting back on to watch this or listen to this, I guess I should say. But yeah, I'll catch you guys here in a little bit. God bless. God bless. Hey, peace out, Moose. Much love, bro. Much love. I don't know who else is here, but I appreciate you guys hanging out. And I'll talk to you guys here in like, I don't know, 30 minutes, an hour maybe. I won't be gone for that long. But